Good evening and welcome to this session of the live virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. In the last class, we started the topic on appointment and remuneration of managerial personnel. We made good time and we were able to look at definitions, and then we went on to the disqualifications applicable to MD, WTD, etc. Okay. And then we moved on to a very, very important topic called Schedule 5. And we could see Section 1, Part 1, we saw fully the conditions. Then Part 2, Section 1, we have finished. We also worked out a problem relating to that. Am I correct? And you arrived at the correct answer, right? Now, we move on to the next situation, which would lead you to Part 2, Section 2. The next situation, where a company has no profits or its profits are inadequate, the company may pay to its directors, including any managing director or whole-time director or manager or any other person or any other non-executive director, including an independent director, by way of remuneration, any sum exclusive of sitting fees. Okay. So sitting fees is not included in this limit. It is in addition. Okay. Okay. In addition. Okay. So you can pay him whatever is mentioned in Schedule 5 plus sitting fees, and reimbursement of travel, etc. is in addition. Right. Now, nice to see Sriram here. Welcome, sir. Keep the questions coming, Sriram. Whenever you feel you want to have a clarity, do feel free to ask a question. Kaushiki is also here. Welcome, welcome. We have Purnima. Okay, I remember Purnima from another earlier session. Welcome, welcome, Mrs. Purnima. Jay, welcome. So now I might have kept on mentioning this. The word non-executive director or part-time director is used in the Act but not defined. Therefore, we have to understand it as a director who is neither MD nor whole-time. So if he is MD, we have a definition for it. Whole-time director, we have a definition, who is in the whole-time employment, whole time. Whereas part-time director is not an employee. The relationship between a part-time director and a company can never be employee. Whereas whole-time director need not be employee. Please understand. Okay, it could be a pure director. But you also have certain situations where a director, like a CFO becoming a director or a vice president becoming a director, would also be an employee. Okay. Whole-time director. MD is an employee, or if there is a contract of employment, he is an employee. Otherwise, he is not an employee. The subtle difference. Please understand that relationships are based on roles. So you can't automatically presume that in one role, he'll be bound by the rules applicable to another role. For example, the rules and duties and liabilities of a director are different from the duties and liabilities of an employee. You cannot confuse the two. So anything applicable under the Companies Act applicable only to his role as a director. Okay. So whole-time directors could be employees also. But part-time directors, non-executive directors will never be employees. The contract between the company and these guys is not an employment contract. Contract of employment or contract of personal service. Okay. Good. Moving on. Section 2 of Part 2 of Schedule 5 deals with the remuneration payable by companies having no profit or inadequate profit. What do you mean by inadequate profit? Means you have already negotiated with this gentleman, right, the MD or WTD, to pay him a salary per month. Let us say you have negotiated to pay him 20 lakhs per month. It is not a big thing, given the nature of his job, the tension, the all sorts of things that he has to undergo. It is nothing. But suppose at the end of the year, you calculate the profits according to 198, which you'll be seeing, and then you calculate 5% of that. That doesn't come to the amount you are paid. It is less than the amount you are expected to pay him contractually. That is called inadequate profit. In those cases, what do you do? How do you pay this gentleman the salary? That is when you have Section 2. So you appoint him under Part 2, Section 2. Then even in a year of loss or inadequate profit, you can pay him salary or certain remuneration as per the table that we'll be seeing next. So where in any financial year, during the currency of tenure of a managerial personnel or other director, the company has no profits, meaning loss, or its profits are inadequate, it may pay remuneration to the managerial personnel or other director not exceeding the limits given in this section. Okay, under clauses A and B. We'll see that a little bit. Now again, you'll keep on seeing this, so I'll not repeat it every time. Other director in this, wherever the word or other director is used, it includes it means a non-executive director or an independent director, right? Normally, all these restrictions on managerial personnel are only on MD, M and WTD. MD, WTD, M. But Schedule 5, Part 2, Section 2 and Section 1 also provide for remuneration payable to part-time directors, non-executive directors, or independent directors. Okay, all of them together. That is continuing here also. So Namrata ji has also joined. Welcome. So this table, try to remember it. Important. You should remember it. So managerial remuneration payable to the managerial personnel is linked to what is known as effective capital. Effective capital. So you can pay remuneration on a scale which is linked to the effective capital. What is effective capital? Next slide. Right now, we will see the table. Right? So you calculate the effective capital. Formula will be given in the next slide. If you don't believe me, see it. But right now, we will understand the table. You calculate the effective capital and see where it is. If it is negative, means you apply the formula and then you arrive at a figure which is less than 0. In fact, they will give you that explanation also very beautifully later. What is negative effective capital? It means effective capital calculated in accordance with the schedule, which results in a number which is less than 0. Wow. What a genius of MCA guys are. They are informing us. Negative means less than 0, whatever. Where you calculate the effective capital and the number you get is less than 0, negative, or 0, or 5 crore, or less than 5 crores. Less than 5 crores. So up to 5 crores means 4 crore 99,999. Okay, effective capital. Then you will go to this. So in those cases, yearly remuneration shall not exceed 60 lakhs. It is per person. Okay, in case of a managerial person, meaning if you got 5, you can pay each of them this amount. MD, MW. This is for managerial person, which is that's why I said the word managerial personnel or person will always mean MD, WTD, M. So if you have one MD, you can pay him 60 lakhs. 2 MDs, 1 crore 20. 1 MD and 1 WTD, 60, take it. Whatever. 1 MD, 1 M, not possible. MD and M cannot be there at the same time. So 60 lakhs, meaning 5 lakhs per month, enjoy. 5 crores and above, but less than 10 crores. 100 crores. So 99 crore 999,999. 5 crores and above, less than 100 crores. 84 lakhs. Not bad. 7 lakhs can be paid per month. I'm not reading the third column, which is nothing but for the other directors. So let's see for managerial personnel first. 100 crores and above, but less than 250 crores. You can pay him 120 lakhs. That is 10 lakhs per month. Okay, you crossed 250 crores. Then 120 lakhs plus 0.01% of the effective capital. Idea is, why are they linking it to effective capital? Because when the effective capital is more, yes, the decision-making pressure is more. The managerial person, the decision-making pressure of the managerial personnel is more. Because the decision-making is more, they are paid more. Please understand, you will not be paid for doing a routine job. Means you will not be paid a high salary for doing a routine job. For doing a routine job, you will pay routine salary. But if you are taking extraordinary risk, if you are willing to use your brain differently, creatively, take stress, then you will be paid more. This is how corporate employment works. Okay. So if you want to be ordinary, mediocre, do the same routine thing, you will pay only salary, normal salary. But suppose you are willing to go that extra mile, etc., you get promotion, you get more. More responsibility, more power, more remuneration, etc. Always remember this. Okay. So sitting in your seat for 5 years, then expecting promotion, government department you can have, or government company you can have. But in private sector, no. Something more is expected of people. Okay. How about other directors? Are they in a year of loss? Can we pay them remuneration or not? You can. Based on the same scale, they can be paid salary in the range of 12, 17, 24. Finally, when it is 250 crores and above, you can pay them 24 lakhs plus 0.01% of the effective capital in excess of 250 crores. So you calculate the effective capital, it should be more than 250 crores now. Therefore, minus 250, whatever you get the number on that 0.01 plus 24 lakhs. This is the amount that you can pay. Okay. Now, there is a rider that they give you, or rather an overall exception. They say, look here, remuneration in excess of the above. Suppose your MD is currently getting 25 lakhs per month. Okay. In a year of inadequate profit or loss, you go to him and say, Saab, it's like this. This year we can't pay you. We'll pay you 10 lakhs plus something. He'll simply throw you out of the room. So instead of doing that, never go to your boss with a problem. Always go to him with a solution. What is the solution? A resolution is passed by the shareholders. So, as a special resolution. So, what you do? Well in time, before the year end, you hold a general meeting, reappoint him by passing a special resolution under Schedule 5, wherein you approve 25 lakhs, 30 lakhs, whatever you want. If the members are willing, okay. Somehow you satisfy the members' boss. What argument you will give the members? Now, look here. This gentleman has been running this company for 15 years. For 10 years, we made huge profits. We got huge dividend. The price is now so and so. If any of you had bought it at 25 rupees, today it is worth 2,500. All that was because of this gentleman. Now, because of general recessionary condition, general weakness in the economy, and other circumstances, we are not doing well. So we cannot prevent him from taking. But again, when the market becomes better, you need him to, take you up. So pay him. You justify somehow and you get the special resolution passed. Then you can pay any amount you want. Very important. In the examination, do not forget this. Suppose you have a question on effective capital. You, in your high intelligence, you will be able to arrive at the number, which is just reading from the table. You memorize the table, you know it. Go beyond one step and say, look here, this is the amount payable under Schedule 5, Part 2, Section 2. In case the company wants to pay more, they may do so if the resolution for appointing the MD under Schedule 5 is passed as a special resolution. Okay. In case the period is less than 1 year, then the limit shall be prorated. Meaning, suppose it is 6 months only. This guy is holding office only for 6 months in the last year. Then he can't be paid 60 lakhs. 60 by 2, 6 now, 12, 6 by 12. So 1 by 2 into 60, prorated. So he'll get only 30 lakhs. Are you able to understand? Okay. Anyway, Virajji, good evening. Before we go, I'll look at Sriram's question, like employee paid monthly. Probably there is an year only after that. Then how an Indian can take the reason for payment of permitted extent? That's what. First, okay, you are now learning something. When you become a chartered accountant in a very near future, hopefully, you will not ask questions like this. You should predict your profit for the year, Baba. As a CFO or as a financial controller, you should be able to do that. You should be able to say, this year, how much profit we will make. Almost by April, May, you should do it, Baba. So that you should know for sure whether you can pay him or not. Okay, and you can continue to pay him. We'll be seeing that later. April, you cannot tell him, boss, this year profit we will see at the end of the year, then I will pay you. Okay, you have to find out what could be the turnover. Boss, you are going to predict your advance tax now. For that, you will have to arrive at profit now. While you are doing that, why can't you do for managerial remuneration? Ballpark figure you should have. Based on that, you should see whether you can pay this guy. If not, then I told you, appoint him by special resolution, go to the central government, do something. That is why you are going to get that fat salary as a chartered accountant, not to ask questions like this. Okay, but rather give solutions. So yes, what we normally do in reality, my dear friend, is we try to predict the profitability for the year, see whether we are in the safe zone or not. If not in the safe zone, we have to take quick steps to ensure that whatever remuneration we've negotiated with him, we can pay. Because remember, all companies may not be family-run businesses. Some companies would be professionally run, in which case the professional MD who is coming now is an MBA from IIM. He's got better things to do than coming and sitting in your stupid company. So he will say, "Boss, I don't know what you do." And he may not even know your company la schedule for. So it is you, company secretary, etc., how to sit, break your head, go and finish it off. Are you able to understand what I'm saying? So that is how it should be. So then you will pay him every month whatever negotiated. But see to it that you get it clarified. And so profits are calculated at the year end only. Who said? Profits are calculated on regular basis, projected for bank purposes, for advanced tax purposes, for managerial remuneration purposes. Okay. If you cannot project your income and profit, then what, boss? What did you want? That is called financial management. You should know how to do it. Am I correct, sir? Do you agree with me? So then how inadequacy taken the reason for payment of managerial remuneration to a limited extent? I hope you have clarified. See, when you look at things from a practical angle, many of your questions will disappear. Possibly you are asking it only because you are a student. Okay, you are a student who is only looking at the words and then raising questions. No, think like a chartered accountant who has to give solution. That is the secret of clearing the final examination. People who think like students will find it difficult to clear. But people who think like a CA will understand the question and give practical answer. So that is why you are given 3 years of articleship, so that you will be able to interact with the senior chartered accountant like me, who will give you the practical flavor, who will tell you the realities. That is why articleship is such an important aspect of our course curriculum. Articleship is not a casual thing. And spending your time entirely in doing corporate audits, going there and doing filing and documentation and all, you will become very strong in SAS, SAP, standard auditing practices. What is that? Your auditing standards. Okay. But while that is important, you should also learn from your senior these practical things, how to solve. So for that, not only should your partner be the source of information. If you are going for an audit to a corporate, the CFO is there. He's a senior chartered accountant, I'm sure. He will have a fund of information to share with you. A lot of people are there. You have to talk to them, question them. They will give you anecdotes, examples from their life. Have the patience and humility to listen to them. Automatically, you will be able to answer all these questions as and when they are thrown at you. Okay. Does it mean that managerial remuneration is paid only on annual basis? No. I think I have clarified that point very clearly. Okay. So, was April, May, this month, all this should be done in all companies. Otherwise, how will you pay the remuneration? So, till March 24, we would have predicted, sir, believe me, already for many of my clients have done it. We know what we are going to, what is our hitting target, hitting rate for March 24. So, we are monitoring and we are constantly finding out where are we, vis-a-vis that target, where are we. One of the many reasons we do it: for budgeting purposes, for income tax, as I already mentioned, for banking. The banker is giving you money now. He will want to know how much profit are you going to make today. For renewal of limit, we have to give projections. Not only for 24, I have to give for 25 also. So these projections are to be used for deciding whether the remuneration you have fixed per month and you are paying him can be paid or not. If not, then here is your solution. Go under Schedule 5, appoint him for 5 years under Schedule 5, ensure that the resolution you pass is a special resolution. So you can pay him more than the above limit also. That's all. So in case you predict one profit and then you find that by July, August, you find it is going down, no problem. You have passed a special resolution, you can pay him. In fact, earlier, for exceeding these limits, you had to go to the central government for approval. Things are not practical like that. The intention is not to prevent you from asking questions, but rather to show you that there are levels of thinking. I want you to come to the next level of thinking. All of us have been students. I was a student once upon a time. Okay. So not only this is addressed not only to Mr. Sriram, this is addressed to all the students who are now listening and any student who is going to download and listen to me. I was a student once. But somewhere I have to elevate my thinking from purely theoretical, argumentative, tarka to jnana. Are you able to understand? Tarka versus jnana. Tarka is limited knowledge meant for argument only. Jnana is complete knowledge, solution oriented. Your choice is that. Our institute is looking for jnana, not tarka jnana, purna jnana, complete knowledge. Tarka jnanam is you can win an argument and go. But Purna Jnanam is where you will give a solution to your client. Only those members, those of our members who are capable of providing solutions on a consistent basis, day by day, year on year, earn more and more. If your goal of doing this course is to earn money, here is the secret. Not by Tarka, but by Jnana. So acquire Jnana and give solution. Automatically you will earn a lot of money. But the more we get into Tarka argument, wow, this is wrong, that is wrong, how possible, we will be only in Tarka. We will be only in argument. We will be only in confusion. Get out of that confusion. Bring that clarity. Raise above. Automatically you will get everything. I'm helping. I hope I'm helping you to do that. So come with me. When I'm giving an explanation, be with me. Next time when you get a question in your own mind, try to approach that way. Hey, maybe the section is not wrong. Maybe the way I'm looking at it is wrong. Is there a better way of looking? Suppose I'm the CFO of this company. How will I do it? This is the secret of CA exam, final exam success also. Those students who are able to, you ask any rank holder, he'll tell you. I did not think like a student. I thought like a member. Think like a member, you will become a member. That's all. That is the secret of CA success. I'm telling you today. Your preparation itself will be like that. Automatically. Because all these subjects which you are learning here are not theoretical. They are not university exam. Every one of it is something that you will come across in your practical life. Even if the subject, so-called company law, is removed from the syllabus and made into self-paced learning, you should study it. Because ultimately, as a CFO, as a finance, unless you are going to be a bill passer, unless you're going to be in bill payment section or whatever, general manager or whatever, then it's okay. But if your goal is to become CFO, then your knowledge should be bigger. You cannot say Companies Act was not in syllabus, it was in self-paced thing, therefore I did not study. Even if you don't know, you have to study it quickly and you have to give the answer. Okay, this has nothing to do with Sriram's question. Sriram, don't react. This is to all of you. A senior chartered accountant, 35 years experienced in practice. Okay, company law is what I teach, but I have practiced all the subjects. Every one of the subjects you are studying, I use it every day. Okay, and I learn it every day. Income tax every day I am learning. GST every day I am learning. Okay, and using and earning. I learn, I use, I earn. Got it? So this is the secret of professional success. It is not as if like a university exam, you will pass these exams and then something else will be there. No, these same things are only going to come there, right? That's the point. Sorry for the elaborate, possibly unnecessary diversion into all these things, but think about what I'm saying. Maybe of some use to you later. I've already displayed this screen for a long time, so many of you would have, while you are getting impatient with my unnecessary talk, you would have gone through it, I hope. So I have classified this definition into 3 parts. What is included? What is excluded? On your left-hand side, as you are looking at the screen, included. Out of that included, you have to reduce certain things. Okay, this is include, and that from that include minus this. Got it? To be excluded, it's different. You should not even consider it. You should not even bring it into this total. Okay. So, first, paid up capital included. That is part of the permanent capital, 100% part of effective capital. Share premium account. Here, friends, I am not using it wrongly. They are using it as share premium. I seriously don't know why. Because elsewhere in the Act, they use the word securities premium account. Here, they use the word share premium account. Why? Mujhe nahi malum. I do not know. You have to ask the gentleman who drafted this schedule. Okay? Share premium account. So, which means then I can even conclude that if there is any premium on issue of debentures, it cannot be considered like that. I don't know why. Share premium account. Then reserves and surplus. Right. Long-term loans and deposits repayable after 1 year. Long-term loans and deposits repayable after 1 year. So these are to be considered. Even loans are considered. Do you notice one thing? This is capital. This is not shareholders' funds or equity. This is total capital. Friends, as you all well know from your financial management and your general awareness of finance, the ultimate ratio for judging effectiveness of management, whether a particular set of management, a team has performed well financially, if you want to evaluate, the best method is ROCE, return on capital employed. The capital amount that you take in that ratio is calculated in this manner. This is nothing but the complete liability side of the balance sheet, which is invested in the operational assets. Friends, I'm repeating, which is invested in the operational assets. Right. That is why they are saying you have to exclude share application money pending allotment, revaluation reserve, working capital loans, overdrafts, working capital items, because we are only interested in the long term. Okay. Of course, for ROCE purpose, we will take working capital also. Net working capital, we will take it. Current asset minus current liability, we will take. Here they are saying no. They are only interested in the long-term capital employed in the business. Also, they are saying exclude investments. Means, see, some of this capital will be represented by investments, right? Now, to that extent, this money is not invested in your operational assets. It is invested elsewhere. Therefore, that should be separated and it should be removed from this. Means you should reduce that also technically, but they say exclude. You should remove it because to the extent of investments in group companies or in any other companies or your investments, they are the paid up share capital, etc., is partly locked up in them. And they are not part of operational. So the MD has no control over them because he has already given it to another company which is being managed by somebody else. So we have to remove it for the purpose of calculating effective capital. Also, any accumulated losses in the balance sheet and preliminary expenses from the previous years, reduce it. Okay. Finally, what you get is called effective capital. Now, suppose this is the first year of incorporation. The effective capital shall be taken as on the date of incorporation. In any other case, as on the last date of the financial year preceding the financial year in which the appointment of managerial person is made. Right? So suppose you are going to appoint him in this year, then you have to take, not the audited, last date, what is the figure you have to take? So, okay, as on the last date of the financial year preceding the financial year in which the appointment of the managerial person is made. So if you're going to appoint him in this year, obviously I will agree with Sriram. If I'm going to appoint him in 23, 24, I cannot know what is 24 ka effective capital, March effective capital. So they are saying take 23 March ka effective capital. So by April, May, you should have the effective capital computed and ready so that you can have a fair idea of what could be your amount that you can pay him. Then you check whether this is, for sure you're not going to make profit. So go back to 23, quickly compute your accounts, unaudited or whatever, take these numbers and quickly make a calculation of effective capital. You arrive at a number, calculate based on the table, you decide how much. Then you see the number, you get shocked, okay? Because your capital may be what, 10, 20 crores. Then you can pay him only 7 lakhs per month. With this guy, you are already paying him 20 lakhs or 15 lakhs. How can you pay? So again, then you start the process. Maybe reappoint him with a resolution, special resolution, whatever. Right. Ideally, appoint him for 5 years under Schedule 5. You are safe. Pass a special resolution. You are safe. Okay. See, in the earlier Schedule 13, you kept on escalating. If you wanted to pay more, then you passed a special resolution. Then if you wanted to totally exceed the limits prescribed, you went to the central government for approval. Here they are saying, this is the limit. Simplified. This is the limit. Take it. If you are within this, great. Enjoy. Appoint him under Schedule 5, ordinary resolution, or even a board resolution. No. Schedule 5, you have to pass an resolution. If you want to appoint him under Schedule 5, board cannot appoint. Only the members can appoint. If you are not going under Schedule 5, if you are confident of profitability, then board can appoint and it can be ratified by the members later. I hope you got the difference between the two. But don't take risk. Appoint him under Schedule 5, pass a special resolution, safe. 1 year. So that like in 5 years, you are safe. You can pay him whatever he wants. So this is effective capital. So here's one more question. Let me see. Can you answer this question? Janvi Agarwal is asking a question. What is limit or meaning of inadequate profit? Limit means Limit means maximum amount which can be paid. Limit means limit, the upper limit, limit, the maximum amount which can be paid under Schedule 5. That is called limit. Inadequate profit. See here. Tell me if the profit is there or not. I explained inadequate profit. Now, you calculate this profit. You calculate 5%. Then you see how much remuneration you're paying to the MD. There is profit, but 5% of that profit is not adequate to pay him the salary you have negotiated. Suppose you have negotiated 20 lakhs per month. You calculate your profitability. Got it? I was explaining this now, were you not listening? The amount of capital he has in his control will decide his, shall we say, stress or his managerial capability. So the higher the capital, the more. So there could be a company that is highly leveraged, in which case he would be controlling the debt also. So the entire decision on the capital will be with him. So here they are using capital, not equity. They are taking the total capital, which includes debt also. But they are not taking short-term debt. They are taking only long-term debt, which is to decide whether he is, what is the span of his control power. More the amount invested in the company, more. To calculate the investment in the company, they are not taking only the equity. They are taking the whole. The word capital is neutral. If you are an expert in finance, you will understand that. See, once you become an expert in finance, you will never confuse the word capital with owner. Capital is the amount invested in the business, whether debt or equity. Equity is the owner. So you try to avoid using the word capital in conjunction with owner. Capital means in conjunction, means in connection with owner. Always use capital for the total amount invested in the business. Okay. Whereas if you want to talk about the amount pertaining to the owners, then you talk about equity. Okay. Equity. The word equity is big enough to include equity share capital, preference share capital, reserves and surplus. Everything is included in the concept of equity. Okay. So here they are calculating capital as a total number, not as equity, for purpose of deciding managerial remuneration. Right? Okay. So madam says effective capital 20. Wow. Purnima J says effective capital 20. Okay. Since in the absence of any other answers, I'm displaying the solution. So we have paid up share capital. Madam, you have made one. I think you have not taken you have excluded DRR. That is the obvious solution I'm getting here. You have taken 10 plus 20, security loan 30 minus 10, you have taken 20. DRR, see, DRR is not specifically excluded. See, earlier when you studied intermediate, the word free reserve would have been defined. Free reserve, reserves which are available for declaration of dividend. Here they have not used the word free reserve. Later on, when we come to 186 and all, you will see paid up capital and free reserves. Free reserve does not include DRR. Here they use the word reserves and surplus. Specifically, they've removed a revaluation reserve. Specifically, they've excluded revaluation reserve here. Right? Specifically. Similarly, specifically, they've removed share application money pending allotment. But reserves and surplus, they have not excluded DRR. So DRR is to be considered for the purpose of this calculation. So once you decide that it is 20, Kaushiki says effective capital 10. Means she has not taken which one? Securities premium also not taken. Then paid up capital, I don't know how you are getting that answer. Minimum you should get 20 because paid up capital, securities premium, because securities premium specifically included, boss. How do you get effective capital 10, madam? Can you give me the numbers for your answer? See, this is where if you enjoy multiple choice questions, you will be in deep trouble because in a real descriptive question, you will be able to write your logic and some marks can be given if you are at least understood somewhat. So, whereas if you go for MCQ, it's this, that. I think I can go with Namrata's concept of it includes all reserves except revaluation reserve. Agreed. Because they're not specifically excluded. Okay. So you have 30. For 30, the effective capital is between, see, the beauty is 30 or 20 or 10, your remuneration would still be 7. Janvi 40. I think I don't know what she's doing. Revaluation reserve also included. I don't know how you are getting all numbers. You are getting all the numbers except 30. Your understanding is correct. Normally, it is not part of distributable, but that's why I'm making the point. The word used here is not free reserves. It is reserves and surplus. Therefore, DRR not specifically excluded. Right? See, friends, you are all highly brilliant, intelligent students. Something you should learn from Srikanth, no? Something you should learn from this lecture, na? What do you say? Huh? So this you learned today, right? Okay, good. See, sometimes I will talk like this. Don't take me seriously. Janvi ji, how did you get 40? You totaled up everything here, is it? You took authorized equity capital, is it? No way. And you reduced to 10, then also 50 only I'm getting. I don't know. Yeah. Statutory reserve, blah, blah. What do you mean by statutory reserve? For example, the under 10 AAA of the Income Tax Act, you create that special economic zone reinvestment and thing reserve. That also you will take it, no problem. Not specifically exempted. Okay. The only item specifically exempted is your friend, the revaluation reserve. Okay. But please, very important, see the way I've written this answer. Last line, if company passes special resolution, remuneration more than this can be paid to Mr. or Miss Jyoti Nivas. Sorry, it's Mr., not Miss. Right? Okay, Purnima. Thank you. That was nice. Good shot. Now, this one. This is based on profit. So, net profit after tax of PQR Limited is 1548. Numbers are there. You can income tax ex gratia. Of course, this presupposes one thing, 198. Knowledge of section 198. Okay. Chalo, it's okay. Let us see if you can intuitively get the answer correct. I'll be teaching 198 very shortly. When you might easily go to sleep. I will go to sleep as I'm teaching you. 198 is so boring, but we'll try to make it as interesting as possible. That is 198 is nothing but what is to be added, what is to be reduced. Now use your intuition, even if you don't know 198, or some of you might be knowing 198 because you came across its ugly face in auditing. It is quite possible that you came across its ugly face in auditing, where they might have taught you for the purpose of company audits, corporate audits. Okay, there they might have taught you dividend, etc., payment of dividend, and there's inadequate profit, all this. So quickly you can compute and give me an answer. I will give you some time. I'm waiting for your answers. Any answer? See, your profit is 15,48,000. This profit is arrived at after debiting to P&L account. Debiting means after reducing. Debit means expense. So that is reduced. For example, income tax is reduced. Also, ex gratia payment to employee is reduced. Now, these two items as per section 198 should be added back. Okay, can be added back for the purpose of arriving at this number. Similarly, you have capital profit and profit on forfeiture of shares. Okay, these two items should not be considered because both are in the nature of capital. Profit on forfeiture of shares should not even come to P&L account. The entry itself is wrong. Am I correct? Your knowledge of accountancy from +2, from PUC, from junior college. If you studied commerce, you should know it is that. Sriram is giving a correct answer of 91,935. Right? 91,935. So he has correctly added and subtracted 1838,700. On that 5%, 91,935. A is the correct answer. Okay. Kaushiki has B. I don't know which one she has not considered. So the first two items are reduced, so they are added back. The second two are credited, therefore added, therefore they have to be reduced. Then you will get your number called 15. You will get your 1838,700. You know, Sriram, I might have been a little critical of your questions, which are slightly detailed and but the way you present your answers are excellent. That way, I wish other students also would present well. Give more details, sir. Don't be you give more details like Sriram is doing. All of you give more details. Okay, be elaborate. Because examiners may not sometimes be able to make the same intuitive leap that you are making. Most examiners may not be as intelligent as you. Therefore, give them steps. Tell them how you. I tell you, I have seen some question answer sheets written by students. Like it's been scrap and finally he'll write the answer. Tell me, you got the answer right. How did he get it? Everything will be scrawled here. Nothing. No separate. See, there should be no working note. Linking with the working note A, B, C, then as per note A, as per note B. Beautiful. That way, if you do, you'll get more marks. But finally, you say, I got the right answer, I got the. How did he get it? That is very important for examiners. Which means, suppose your answer is correct and the total mark is 5, they give you 3 or 2.5. See, when it's so messy, they themselves will feel little 2.5. Whereas the guy who wrote the correct answer with all the steps, 3.5. You might say, does that 1 mark make a difference? It does not for that question. But if it's adding up over, say, 8 questions, sorry, it makes a big difference. It could be the difference between 50 and 45, or 52 and 45, or 64 and 58, or 64 and 55. You might ask me, how does it make a difference? It could make a difference in aggregate. Or if you are aiming for a rank, it could make a big difference. Okay. If you hear me saying aiming for a rank, you might be very surprised. Yeah, why not? Because the payoff for CA final rank is very high. The payoff is very high. It is worth the effort. Not by egoistically telling I will get a rank, but into it, very carefully planning, listening to people like me who have already got a rank 4 times as to what is to be done. Not egoistically telling, sir, I want to get a rank, how to do it. Not like that. But thinking, I always think, I'm a fool. I'm not knowledgeable like many of these people here. Still, I can do it. How? Then plan, study, remember, work out, and be prepared for the exam. Calmly and quietly go there and write it and get it. This is a secret. So, but the payoff is very high. When I qualified CA final, All India 38th rank, and so many companies offered me a job. Unfortunately, I was not interested in employment. Therefore, it was not useful to me. But of course, all the 50, up to 50 ranks, they will announce. all of us, and 50, and sometimes it will be shared. For example, my 30th rank was shared by 3 people. So you will have more than 50, easily about 125 people will be there. Those 125 people will get job offer straight. Means 100% job assured. Means clean job assured. Rest will get job. But these people will get clean job. They can choose what job they want. Ideally in multinational company or in a big nationally present branded company at salaries that are above the par. You will get in. Your first job will be a very, very fantastic opportunity. That is why I'm saying the payoff for rank is very high. Therefore, it is worth preparing and working towards that. Please, I'm not trying to push things. I'm only saying, right, but don't immediately become egoistic and say, yes, I can do it. If man like Srikanth, who is such an idiot, can become a rank holder, I can do it. Don't be egoistic like that. Rather, think with humility. What he says makes sense. By the grace of God, let me also try. This is a slight difference between winners and who are not winners. Second up, runner-ups and winners. Winners are humble. Runners-up are egoistic. And when they come second, they get frustrated. Whereas the guy who comes first, he is happy because he never expected. Good. You work a little more, read more. Read in the early morning. Read the subject which you cannot remember in the early morning. Okay. Early morning is the best time to remember. Late night is not the time you should study this topic. If you are not able to remember, then 4 a.m. in the morning to 7 a.m. or 5 to 7. That is the time you have to study this. Read it once or twice. Write it out. See, you read it. Then without seeing, repeat it yourself. Then write it out. Then see the page and correct it again. Chances are you will remember, sir. Okay. If you still don't remember, Viraj, what can you do? Yeah, you tell me. That is what they told you now when you are trying to do CA. What did they tell you? CA needs hard work like that. They told you, no, this is that hard work. You have to prepare. You have to remember. How to remember is simple. You read it 3 times, 5 times, you'll remember. With concentration. You will remember. Write it out. You will remember. You can remember. Okay. Nothing. It is not difficult to remember. Remember what I told you about getting CA rank means assured job. Clearing CA final means assured job. That will motivate you to remember. Motivate your mind to remember. Give your mind reasons to do what you wanted to do. It will do better. Incentivize yourself and tell. Yeah, Brahma Muhurat, whatever you are using, the words and all. Point is, if you want to remember better, study in the morning. Right from 4 a.m. is Brahma Muhurat. 4 a.m. some of you, we get up at 4, what I'm saying now, 4 a.m. to 7 a.m. Again, go to bed at 7:30, get up at 9. You sleep, but use that time. In fact, that will be even better because you study, then you go to sleep, chances are you remember. Think about it. But studying late into the night, say for example, like 1 a.m., 2 a.m., not a good idea. You might be seen as hardworking by everybody, your family, night and day, he is studying, she is studying like that. But the reality is, the body is not able to take it. You'll feel fatigued. And nearing the exam, you will actually feel very, very disabled. So don't study late into the night. Maximum 11 o'clock. 11 o'clock, 11:30. Go to bed. Okay, you're not able to get up at 4:30, get up at 5:30 morning. 5:30 onwards, you study till 8:30. Then relax, walk about. Then go for a breakfast. Then if you feel like it, don't do anything. Read some other book or watch a movie or listen to music for 1 hour. Don't do anything. Then again start preparing some computational topic, costing or income tax. Then around 1 o'clock, 1:30, have lunch. Sleep. 2 to 4 sleep. Nothing wrong. That sleep itself is going to rejuvenate you. And what all you studied, it will get assimilated. Again, 4 o'clock, get up, take a bath, go for a walk if necessary, take in fresh air, come back, have a cup of chai. 6 o'clock, 6:30, start again. 6:30, 7:30, 8:30, 9:30, 10:30, maximum 11. Boss, you study so much. That is enough. Some people will tell me, Mr. Srikanth, I studied for 26 hours. Huh? How you study 26 hours? Yeah. You cannot study. Maximum you study 14 hours. 14, that too nearing the examination. Not more than that. So don't over build up on that. Don't think that if you spend more time, it means that more. Rather concentrate on what you're studying. Remember it. Repeat it like that. This is the secret of success, I'm telling you. Otherwise, sorry, the idea is not to tell you what is what and all, because you people know better than me. But still, my suggestion to you, okay, don't listen to all this bullshit that study 22 hours, 23 hours, night and day. Then nearing the exam day, the body will be fatigued. The day of the exam, pressure will build up. Body cannot handle vomiting, loose motion, this, that, exam fear, go for the exam. And then the first question and second question will be a little tough. Solve. And then third will be easy, for third will be very easy. But first two will, I studied so hard, all this is not, God. So calm. Last to 1 day before the exam, nothing can be done. What you did not study for 3 months, you cannot study in one evening. The preparation should have happened. Then calmly only revise and give yourself boosters. I can do it. Everything is fine. I know the subject. Go the exam. I'm sorry, I'm unnecessarily going into how to prepare for exam and all, but I have 2 qualifications. 1, I am a teacher. 2, I am a student who cleared with success. So both sides I can be. As a student also I can tell you. As a student who cleared this examination with All India rank 2 times, inter and final, and AC is also inter and final. Without boasting and telling this. Therefore, what I am saying, you can take it as valid. That is why. Of course, I'm sorry, but I take back what all I said about my rank and all. I'm sorry, I should not have told that. Being a rank holder is not a great achievement. Please, let's leave it at that. But success in the exam, secret, I have told you. Okay. So just think about it. Chalo. Moving on. As Sriram has given the right answer. No, keep going. No, because we have to finish the syllabus. What all you got now, you implement first. Instead of how much ever I tell you, I will only benefit, Bahas. You have to implement it. Only then you will benefit. Listening to me won't help you. Doing is what is going to help you. I listened to my seniors. I listened to my father and I knew what he told me. I believed it. I did it. I cleared. Like that you have to do. Instead of listening and arguing with the person, you should do what he's saying. At least try. Okay. Then koshish kar dijiye na, see what happens. If it works, it works. If it doesn't work, hello, chhod dijiye. Okay. Remuneration payable where company has no profits or its profits are inadequate. What we saw was A. This is A. Now we go to B. D. In case of a so earlier was about a normal managerial personnel who is not in a professional capacity, who is not functioning in a professional capacity. In case of a managerial person or other director who is functioning in a professional capacity, meaning what? Chartered accountant, company secretary, engineer. These are all professional capacity. Okay. Then remuneration as per item A discussed above, that is based on effective capital. This is A. This is A. So whatever you have discussed above may be paid. If such managerial person or other director is not having any interest, whether directly or indirectly or through any other statutory structures in the capital of the company, its holding company or any of its subsidiaries. So he should not have any interest, whether directly or indirectly, etc. in any of this. Not having any direct or indirect interest are related to the directors or promoters. Okay. At any time, not only now, at any time during the last 2 years before or on or after the date of appointment. So last 2 years before or on or after the date of appointment, he should not have any, and he should be possessing graduate level qualification with expertise and specialized knowledge in the field in which the company operates. Okay. So they are not asking for CA and all. See, any graduate, even an engineering graduate, is acceptable and he will be able to get, okay, as per item A, which we discussed above, based on effective capital. So if you want to pay him in a professional capacity, then he should not have any interest, directly or indirectly, to any other statutory structure in the capital of the company or its holding company or any of its subsidiaries. And he should not have direct or indirect interest or related to the directors or promoter. Idea is, you cannot bring a relative in through this route and pay him, saying that he's got a graduate level qualification and all. So they are saying if he's having any interest, then you cannot pay under Schedule 5. That's what they are saying. Okay. Holding by any employee of a company of shares of the company not exceeding 0.5% of its share capital under any scheme like ESOP or any other scheme for allotment of shares shall not be deemed to be interest. So if the gentleman is only holding shares which is less than 0.5%, not exceeding 0.5, up to 0.5, then that is allowed. Beyond that, you should not. Okay. Say statutory structures. Any other statutory structure means they are talking about associated enterprise or other type of relationships between companies. Okay. So actually, this is a mess up. I don't know why they've included this. If you ask me honestly, B makes no sense to me. What was their goal? We don't know. I'm only assuming that some relative or somebody having interest in the company should not be pushed in through Schedule 5 is what they are afraid of. I think so. So we have seen A and B now. For that, some conditions are prescribed. First is the payment of remuneration should be approved by a board and also by the Nomination and Remuneration Committee. The company has not committed any default in payment of dues to any bank, PFI or non-convertible debenture holders, etc. Or in case of default, the prior approval of the bank, etc. has been obtained before the approval in the general meeting. Then an ordinary or special resolution. Please note it, my dear friends. If you pass an ordinary resolution, then you cannot pay in excess of the limits prescribed under A. If you pass an ordinary resolution, then you cannot pay more than this. So intelligently, what you do at the time of appointment of this gentleman for 5 years, according to Schedule 5, you pass a special resolution straight away. So you have no problem at all. You can pay more than that also, even in a year of loss or inadequate profit. Right? That way, if you pass a special resolution, this is a very liberalized provision. Even in a year of loss or inadequate profit, you can pay him his negotiated salary. Okay. Right? Yeah. If you have any doubts, you can ask. Now, along with the statement, you have to give certain details, okay, about the person. Okay. Is this important from exam point of view? No. But should I cover it? Yes. Because it is in the institute material, I cannot avoid not covering it. Should I go in detail? My humble suggestion, no. Can I quickly run through it? I humbly suggest that I can. So quickly, nature of industry, date of expected commencement of commercial production. In case commercial production already commenced, use are not applicable because only when it's a gestation project now, you'll say, if it is still in the project stage, you'll say still in project stage. That's all, whatever. In case of new companies, expected rate of commencement of activities, financial performance, they have given certain indicators, ratios, foreign investments, collaborations, if any. This is in general information. Then second, information about the appointee, background details, past remuneration, recognition or rewards, job profile and his suitability, remuneration proposed, comparative remuneration profile. See, you might ask me, where will I get it from? Absolutely don't worry. You go and pay a fat fee to McKinsey or Pricewaterhouse. They have consulting division whose only job is doing this. They will all compile all the comparative profiles and say this is that. Because how they will get it? Simple. That remuneration would be disclosed in the board report. Okay, because median salary you have to report now who's getting more than that. Definitely, see, this gentleman will come, managerial person will come. So there you have to report what they're getting. Based on that, even many times company, magazines like Business Today will publish CEO salary. Then they say, Mukesh gets so much, Indian Oil Corporation, CMD gets so much. So you'll see who is the highest. Up to 50 people they'll give. That is a top honchos. But you can get for anybody. Across industry, data is available. Consulting companies can give this to you. Pecuniary relationship, directly or indirectly with the company or relationship with the managerial personnel, if any. Other information, reasons for loss or inadequate profit. Steps taken or proposed to be taken for improvement. Expected increase in productivity means what is this guy going to do after coming? How is he going to take you further? You should also mention in the corporate governance part of the board's report, the elements of remuneration package. See, this is how they'll get the information from public documents. Details of fixed component, performance linked incentive, etc. Service contract, terms and conditions, notice period, etc. Severance fees. See, the severance fees is also known as, I don't know if you heard of this term, I'm sure you have. It's called golden parachute. Usually, for high top executives, there will be a clause in their employment contract which says, in case the company wants to, do away with their service, so long as there is no conduct issue or anything. Simply the company wants to, has taken a decision not to have him, then they have to pay 6 months' salary. So huge amount, or it may be even a lump amount they will fix, 2 crores, like that. That's called golden parachute. So even if the company goes into difficulty, if this guy is removed, he will be paid a huge amount. It's called a golden parachute because even when the company is crashing, this guy will escape. Financially, he will escape with the severance fees and go away. Stock option details, if any, etc. Now, the word statutory structure was used now. Means any entity which is entitled to hold shares in any company formed under any statute. So, by virtue of a statute, an entity is entitled to hold shares. Okay? Yeah, I don't understand this. Even if you ask me, I don't understand. Seriously. So, whatever is the English meaning of this sentence, you please take it. Any entity which is entitled to hold shares in any company formed under any statute. So, we are assuming that there is a company formed under a statute. By virtue of that statute, an entity means some other entity is entitled to hold shares. So, this must be a government company formed under a statute. By virtue of that, say some central government ministry is entitled to hold. God only knows what they are trying to do here. Okay. Seriously, I am not saying that I am unable to explain. I am saying I am unable to understand. Okay, only if I understand I can explain. If any of you is able to make sense of this gobbledygook, please go ahead and explain to me. I will listen to you. In South India, we have a temple in a place called Swami Malai, where Shiva, he was willing to take lesson from his own son Muruga. So we are always willing to learn from juniors. So if any of you can enlighten me, I'm ready and willing to listen to you and learn. Okay. What this MCA gobbledygook means, if you are able to explain to me, I'll be more than happy. But if I were in your position, I will not break my head on this. Because that's all. That is my choice. I would have simply ignored it and gone on with my preparation, studying the important aspects of this topic, which is this. I'll be thorough here. More so when I'm not able to remember, why waste my memory on this thought of gobbledygook that is not at all relevant. This is my humble submission to you. In fact, default in complaints of 92 affect payment of management. Will it? Let us see. They are giving only these conditions. Do you find it here? No, it will not. It has nothing to do with managerial remuneration. Good question. Very interesting question you have asked. No, it is not here. Okay. Again, be careful. Payment of managerial remuneration is a wider topic. Okay. Whether under section A and section B both. So you have to be careful because remuneration is going to be paid under 3 sections. Sorry to come back and show you, but be thorough with this chart. Section 1, where there is adequate profit. Section 2 and Section 5, remuneration of 2 companies. 3 sections are there where they can pay. Okay. So in all cases, non-filing of annual return and financial is will not restrict managerial remuneration. Good question, but interesting question. Anyway, I'll reserve that part in case now we come to section 3. Remuneration payable by companies having no profit or inadequate profit in certain circumstances. special circumstances. Part 2, section 2 was for companies. There is effective capital, special resolution, etc. Now we are going to see exception to section 2. Companies not having profit or inadequate profit, but there are certain special circumstances. In the following circumstances, a company may pay remuneration to a managerial person in or other director in excess of the amounts provided in section 2. Again, the word other director includes non-executive director, director. So the limits of schedule 2, section 2 can be exceeded in excess of the amounts provided. So you can pay more than what is mentioned in section 2, provided you show that special circumstances. What are they? This is some more nonsense you are going to see here. Let us see. So basically how you should understand it, section 2 prescribes limits. In an year of loss or inadequate profit, you can still pay the amount up to the limits based on effective capital. If you pass a special resolution of appointment, you can exceed it. So section 2 over. Now they are saying if these conditions apply, then ignore section 2, pay whatever you want in excess. No problem, provided you show the special circumstances. So where the remuneration in excess of the limits in section 1 or 2 is paid by any other company, and that other company is either a foreign company or has got approval of its shareholders in general meeting to make such payment. This is the exception of schedule section 2. Section 2, what did they say? If you pass a special resolution, you are exempted. That they are including it here. Also, they are saying if it's a foreign company, you can pay whatever you want. And treat this amount as managerial remuneration for the purpose of section 197. And the total remuneration payable by such other company to the managerial person or other directors, including such amount or amounts, is within permissible limits under section 197. That is, the overall limit of 197 should not be ignored. The overall limit is 11%, should not be violated. So long as it is not violated. See, you know what they are trying to do? Somewhere they are trying to link schedule 5 with section 197.1. They are saying, and I don't know why they are doing it, because section 1 talks about adequate profit. Where there is adequate profit, section 1 will apply. You need not go into section 2 at all. Here they are saying you can pay in excess of section 1 and 2. Okay. Section 1 talks about 11%. Now, and then they are saying it should not be violated. Okay. I don't know what this section 3 is all about. My understanding is simple. My understanding is going to be very, very simple. If you are having profit, calculate 5, 10, 11, etc. You get a number. You are not happy with that number. You want to go beyond that, go to central government for approval. No problem. You pay. Within that, sublimits and all increasing, you go shareholders and get it. 197.1 over. Year of loss or inadequate profit, come under schedule section 2. See if effective capital is there. If not, then section 2 itself is telling you very clearly, pass a special resolution, appoint him, make it. That's all. My understanding is very clear. Okay, in which case, what is the role of section 3? Part 2, section 3, God only knows. Okay. And why bring foreign company here? I don't know. Okay. This clause is meant to link schedule 5 with 197.1. This is my understanding. In this case, the sublimits are violated, but the overall ceiling of 11% is not. That is, you are paying one guy more than the other. Okay. But overall ceiling of 11 is not violated. That is what they are trying to point out here, is what I feel. Okay. Where overall 11% is not violated, but one guy is paid 10 as against the normal 5. So long as the overall 11 is not violated, go ahead and pay. That's what they are trying to say. This exception is available to 2 companies, which are the foreign company and approval of shareholders in general meeting. Please go back to 197.1. I will actually do that. Quickly, I'll do it for you. Where you will find this is provided there. Friends, exceeding any of the sublimits may be exceeded with the approval of the company in general meeting by passing a special resolution. Okay. Got it? Got it. So that's what I put in the slide where I've got this. I only said Schedule 5 is interesting. I never said it was easy. Huh? So my suggestion is, what all we have learned up to now, Section 3 is only reiterating it. Nothing new. They are only trying to carve out a sort of exception for sublimit increase. That's what I'm seeing here. Okay. In case of minimum limit specified is more than 11% of net profits, which one will be given? What is that minimum? What is that minimum limit, Mr. Sriram? Can you elaborate? Minimum limit specified. What is it? Where is it specified? In section 2, is it? This part, is it? We're talking about limit here, is it? Here. Is this what you're talking about? Friend, if this is what you're talking about, be careful. This is applicable only when there is a loss or inadequate profit. When there is a loss or inadequate profit, only then this will come. So how can it be more than 11%? I mean, this is what you're talking about. Otherwise, you elaborate it from me. If this is the limit you're talking about, this cannot be more than 11%, because if this is, you are going to get into this area itself, it means your profit is not there or you are having inadequate profit. So where is 11%? It is obviously above 11%. Okay, so the minimum limit cannot be more than 11%. I hope you got it. Okay, good. So, no problem. So long as you are clear, I'm happy. In fact, yesterday I was in a meeting where somebody was asking me, are you happy? I said, I'm not unhappy. There is also one state, now. Happy, unhappy, not unhappy. That's a very peculiar state, not unhappy. Most of the time we are experts in making ourselves unhappy. But making ourselves happy, making ourselves unhappy, everybody knows how to do it. Getting confused, getting afraid, worrying, thinking what will happen. Human beings are experts in creating unhappiness for themselves. Whereas true happiness, Sat Chit Anand, is always there. Sat Chit Anand, always there. Just have to go back, stay there, you'll get. You're not happy, you're not unhappy. That's a great place to be. Happiness also is short-lived. So get into a state when you are not happy or not unhappy. Okay? And that is the state to be. There is Satchidanand, always. Chalo. Moving on. This is A. This is B. Exceptional cases, exceptional circumstances B. Where the company is a newly incorporated company for a period of 7 years from the date of its incorporation, you pay whatever you want. 7 years from the date of incorporation, no thing, go on. Sick company for whom a scheme of revival or rehabilitation has been ordered by BAFR. No problem. Again, now SICA is not there. Now Sick Company Act is not there. BAFR is not there. So the second point is for any surviving sick company under the BAFR still continuing. Now we have what is known as the IBC, Insolvency and Bankruptcy Code. Under that, NCLT may go for a resolution plan. In those cases also, obviously, they have gone through the NCLT now. So you can ignore this. Special company where you can pay in excess. C, where the remuneration of a managerial person or other director exceeds the limit of Section 2, but the remuneration has been fixed by the BAFR or the NCLT, go ahead, pay, because they have fixed it. Quickly, I'll clarify for Sumit Tanvi. See what he says. Does manager means whole-time director? So manager is a person who is not a director. First day, last class, I taught you the definition. Manager is a person who is not a director. Only then we have manager. So don't confuse. Okay. So manager means not a whole-time director or MD. Other than this, only manager. Okay. So see, I explained, why the word manager was even included here. Because they wanted to exclude a possibility of having a person who has control over the whole or whole of the company, management of the whole of the company, to whom salary is being paid, but said, hey, he is not a director, therefore section won't apply to him. To prevent that, they said, hey, even if he is not a director, if he has, under the superintendence or control of the board, if he has management of the whole of the affairs of the company, he is a manager. So all the ceiling limits will apply to him also. That is all. Other than that, manager has no meaning. And manager is a person who is not a director, because whole-time director already specifically defined. Employee is different. Somebody who is employed by the company. Any employee cannot become manager. Though you see, that's what I'm saying. Confusion. You might hire a guy and call him manager, but he won't become manager under the Companies Act. Because under the Companies Act, he should have the power of control over the whole of the affairs of the company. Management and control of the whole of the affairs of the company. Only then he will be manager. Employee who is a manager under the Companies Act. Okay. Got it, sir? So if you want to enjoy these exceptions, then you should meet all other conditions under section 2, you remember? And the managerial remuneration should, and if you want to go under the special condition, then you can receive from only one company. Okay. Also, the auditor or company secretary of the company or a secretary in whole-time practice should give a no objection certificate. Shall certify that NOC has been obtained from all secured creditors and term lenders for the appointment and quantum. Okay, in form number MR1. When you are going to the central government now, in form number MR1, along with that form, you have to fill this. The auditor or company secretary or the company has not appointed a secretary in whole-time practice shall certify that there is no default. After you appoint MD, you will file MR1. Along with that MR1, you have to file this. What is MR? Managerial remuneration. That's why it's called MR. We already saw this now, so I'm not going to waste your time. Schedule 5, Part 2, Section 4, Perquisites. Thank you, Smiji, for confirming that you got it. Perquisites not included in managerial remuneration. We already saw that perquisites includes all items included under the Income Tax Act. But out of that, they are carving out certain perquisites and saying not included. Very silly. Contribution to PF, superannuation fund, annuity fund. To the extent these are either singly or put together, not taxable under the Income Tax Act. So contribution to Provident Fund by the employer, superannuation fund, to the extent it is not taxable. Gratuity payable, as per the Gratuity Act, half-month salary for each completed year of service. And you know very well, Gratuity Act restricts that salary also. So the statutory gratuity is based on 16,000 or 13,000, I forget. Sorry, seriously, I'm not aware. If I need to be aware, I will become aware. Don't worry about it. I will refer to it and I will inform my client. As of now, I'm not able to remember. That's all. So that is restricted to the 13,000 or whatever. On that only you have to pay statutory. Beyond that, whatever you pay is ex gratia. Encashment of leave at the end of the tenure, all this is exempted. Similarly, for a expatriate, meaning non-resident Indian or a foreigner who is coming to India to be employed, they are eligible for these perquisites, which shall not be included. Children education allowance, limited to maximum of 12,000 per month per child. Okay. Or actual expenses, whichever is less. Holiday passage for children studying outside India or families studying abroad to bring them here. Okay. Return holiday passage once in a year by economy class or once in 2 years by first class to children and to the members of the family from the place of their study or stay abroad to India. They are not residing in India with the managerial person. Hey, who will want to bring the children to India, boss? I want to go to Denmark. I want to go to Amsterdam and enjoy being with them and in my country. You give me exemption for that. That makes sense. Bringing the children to India, they are giving exemption. Anyway. Leave travel concession, return passage for self and passage in accordance with the rules where is proposed leave be spent in home country. That is great. This is something I like. Otherwise, I don't see anything. These items are perquisites, but boss, taxability under the Income Tax Act is different. Don't confuse. Some of these are taxable under the Income Tax Act. But for the Companies Act purpose, for calculating the remuneration to see if it is within the limit or not, for calculating the remuneration to see if it is within the limit or not, you should not include these perquisites. Okay. So if you don't immediately confuse, so taxability in Income Tax Act, it may be taxable. Even then, it is exempted here. Okay. For the purpose of this schedule, family, because they use the word family here, na? Family. Family means spouse, dependent children, dependent parents of the manager. Thank you. So the nomination and remuneration committee, you'll be seeing more about this committee in the next session, in the next topic, where we'll be talking about meetings of board meetings. We'll be talking about committees also. There you will see what is this nomination and remuneration. See, it's a selection committee. See, idea is this committee would be composed of independent directors who would interview the candidate for the post and appoint him. So some kind of a corporate governance. Okay. So they'll take into account financial position of the company, trend in the industry, appointees qualification, experience, past performance, past remuneration. But if he's the MD son, then it's a totally different story. Be in a position to bring about objectivity in determining the remuneration package. What objectivity? Anyway, they are expected to be objective while striking a balance between the interest of the company and the shareholders. Expatriate means somebody who is a citizen of some other country who comes to India for the purpose of employment. There are a lot of people like that. Germans, Englishmen, Americans. For example, there may be a company, I think, what is that company? Coansys, CTC. They had a foreigner, as an Indian, but who was a citizen of, I think, Europe, some country in France or, I don't know, American, citizen of America. He came back to India and he took over a CEO. So, CTS. So, it can cognizant, it can happen. So such people are called expats. Okay, they are called expats, foreigners living in our country for employment purposes. Okay. In India, we don't have so many expats because we don't encourage them. We don't give them that many visas, and they don't have reason to come to India. If you go to Africa or Middle East, you find a lot of expats are there. The oil companies and all, they send their US citizens to come to Dubai or Abu Dhabi, and they will stay there, and they will be getting, they are called expats. Okay, they are called expats. I had a couple of clients who were expats who used to live in India, Germans. One was a German and the other was Canadian, not a Canadian, sorry. Yeah, this guy was employed by a Canadian company in India, but he was a citizen of, he was employed by a Finnish company in India. He was a citizen of, his name was Matthew Kuhn, great guy. But he was an Australian citizen. But his wife and children were staying in Singapore. But he had an Australian passport. So, very peculiar. And he was working in a Finnish company. But his address was Singapore address. So, taxability and double taxation avoidance began. Finally, I asked him, Matthew, which country passport are you holding? Australian passport. I said, show me. He said, Australian passport. Then we will have to compare Australian taxation with Indian taxation. So I showed him Indian taxation. This is what you will get. And I converted it into euro. And I showed him this is what you will get in euro. This is what you will get in Australian dollar. Now then he did his own calculation. Australia, 40% tax. Flat, not slab, flat. So he calculated and then he converted that into euro and all. And he saw the numbers. He said, I'll prefer to pay my tax in India. So we opted to pay the tax for him in India. And we deducted and he paid. We didn't do any planning for him. He was happy to pay tax in India. Can you imagine? India, when compared to certain countries, India is a tax haven. Or rather, at least India is tax beneficial for these guys, expats. So they are basically citizens of foreign country. This guy loved our ambassador car so much that he was driving an ambassador throughout the 4 years he was here. Then he was posted to some other country, I don't know which. But during his tenure, he was only driving an ambassador car. Okay. Wow. This is ultimate Aryabhatta. Our Ministry of Corporate Affairs has become Aryabhatta. Yeah. Aryabhatta, what is that? Varahamihira, Panini, all the Jyotish and the arithmetical people have come together to conclude, give this great finding. What is that? Negative effective capital means the effective capital, which is calculated in accordance with the provisions contained in explanation 1 of this part, which I have discussed, and is less than 0. Wow. How enlightened I have become. Negative effective capital means I calculate the effective capital. It is less than 0, negative. Thank you, sir. I don't know how I was surviving without this knowledge. Thank you. Thank you for educating me. Sorry. So you compute it according to this formula, and the resultant number is less than 0. It is negative. Wow. Sorry. I'm really sorry if I sound very arrogant, but then too much, yeah. Negative meaning we don't know, is it? That means there have been some people who don't know the meaning of the word negative and have argued with the MCA. So to be clear, once and for all, they have told what is negative. Actually, this happened because earlier they did not include negative category. They said less in the earlier schedule 13, less than 5 crore. There we had the argument. We said, look here, if it is less than 5 crore, it includes negative category also. So they want to be clear. Yes, it includes negative category also. So what to do? But this is there, not only here. From schedule 13 of the Companies Act 56, it is there. Okay. Schedule 5 is pretty lengthy, right? But it's good. Believe me, Schedule 5 has created a lot of relief. Because most cases, it is a complete, shall we say, rule, complete and coherent in itself. If you go through Schedule 5, appoint him by special resolution, you have no problem. Year of adequate profit, pay him 5%, 10%, whatever. Year of inadequate profit, anyway you pass a special resolution, pay whatever you want, enjoy, that's all. So that way, now, remuneration payable to a managerial person in 2 companies. Can a person be a managerial person in 2 companies? Please be careful. He can, provided there are certain other conditions need to be satisfied. We'll talk about it later. Right now, just to understand, if a person is drawing from one, see, he cannot be in more than 2. That is, a person can be a managerial person in 2 and not more than 2. That is, if he is already in 1, he can be in 1 other company. That's all. Totally 2. And he can draw remuneration from both. He can draw remuneration from both, provided the total remuneration drawn from both the companies does not exceed the higher maximum limit admissible from any one of the companies. So the total should not exceed higher maximum limit admissible from any one of the companies. So what you should do, if there are 2 companies, you should see what is the remuneration payable for one company. Means you should ask yourself, adequate profit or inadequate profit. Then decide. Then you find out for the other company. Then the overall limit cannot exceed what he can draw from only one. That's all. You cannot pay from both. Okay. Higher maximum limit admissible. Here they are using the word limit. So you cannot exceed the limit. Even if you have passed a special resolution, you should calculate the amount payable in this company. Then you have to calculate in that company and then see which is the higher. That is the total amount you can pay. You can pay in any company you want, in any way you want. But the total cannot exceed the higher maximum limit. For example, you calculate 5% of the profit. It comes to 5. That is the limit now for, in the case of adequate profit, 5%. It comes to 2 crore, let us say, 2 crore. In another company, inadequate profit, you calculate the limits correctly, that total remuneration you can pay him comes to 84 lakhs. Now, which is the higher maximum limit? 2 crore. So that 2 crore can be paid in both the companies. You cannot exceed the higher maximum limit admissible. Are you able to understand what I'm saying? Suppose in the other company, the profit is huge. There he can be paid 3 crore. Here he can be paid 2 crore, assuming. And there are companies like that. Believe me, suppose a company has made 100 crore, 200 crore profit, Baba. There are companies. You go and check Reliance, Airtel, Tata, see the profit. You see the managerial computation, it will be given there. You'll be shocked and surprised how much money they are making. If so, one company can pay 3, another company can pay 2. He is getting from both. Totally cannot get 5. he can only get 3 from both. In any way you pay. Whatever you want, you pay. But the total that you pay from both the companies cannot exceed the higher maximum limit from any one of the companies. Okay. The part 3 is a certain procedure. The appointment and remuneration should be approved by a resolution of shareholders in general meeting. The auditor of this or secretary, or where the company is not required to appoint a secretary, in old time practice, shall certify that the requirements of this section have been complied with. Earlier, chartered accountants we used to certify. Today, we fold our arms, namaste ji, and we give it to the company secretary. You certify, you go to jail. I am not involved in this. Because already I am certifying so much. Why this also? You enjoy the fees, you also take the responsibility. Schedule 5, Part 4. The central government may by notification exempt any class or classes of companies from any. As of now, it has not exempted. They are simply retaining the power to exempt. Okay. So, we have finally come to the end of Schedule 5. Congratulations. And so, allow me to sort of give a small break. A small break so that we can, go for a break and come back. Let's see if I can complete this topic today. I doubt, but because another 30 slides. If you have any questions also, you can ask me. Okay. Let me not keep this. Let me keep this open so that you can go through it in case. So the time now is something like 9:35, you can say, or 9:32, 33. So 9:45. Up to 9:50, 9:45, depends. 9:45. I'm sorry, 9:45. 7:45. 7:45 limit. To 7:50. Sir, break, sir. Welcome back from your well-deserved break, and let us move on on the topic. Sriram is asking a question as usual. See, director is a common term. Director includes MD, WTD, part-time director. Part-time director includes normal non-executive director, independent director, blah, blah, blah. The total limit for all these directorships for a person is 20. Got it? Now, whereas managerial person means, be clear, because even here you will see the difference in this. Managerial person means MD, WTD. Manager. MD, WTD, manager. Manager, only one company, not even 20. That limit of 20 is only for director. So, person can be, if he is a MD, WTD only, you become managerial person. This limit of 2 companies is there only for MD and M, not even M, MD, WTD. Think about it. Can a person be a whole-time director in more than one company? Boss, you are whole-time in only one company. The minute you are in another company whole-time, in both the companies you are part-time. So, whole-time only one. Okay. MD alone, they give an exception. In some cases, in the case of group companies and all, same person can be MD in 2 companies. Got it? So, as a director, he can get remuneration from any number of companies. As a director, simple, sitting fees or part-time director ka remuneration, any number of companies. As MD or WTD, he can get only from 1, maximum 2 companies. Even WTD cannot be logically in more than 1 company. Only MD can be in 2 companies. Which means, while counting 20, other than MD, WTD, you have to take. So, MD only 2, WTD 1. You can't be MD in one company, WTD in another company. No. So, you be MD in one company, maximum 2 companies. Then remaining 18 companies, normal director, non-executive director, part-time director. That is how the 20 will happen. That's all. He can get from all the companies where he is a director as a part-time director. Whereas from the company where he is MD in one company, maximum another 1 more company, 2 companies. That's all. But the total cannot exceed 20. Got it? In this, private companies are not considered unless they are subsidiary or holding of a public company. That's all. Fairly simple topic, Sriram. No need to get confused about it. So your question, is he allowed to relative? This is remuneration only 2 companies. As MD only 2 companies. As a director, non-executive, 20 companies he can get now. 20 companies he can get. Sitting fees, that 1% or 3% he will get. No problem. Many people will be like that. There are a lot of people who are MD of one company. For example, Mr. Narayana Murthy would have been MD of Infosys, but he would have been a non-executive director in at least 7 other companies. And so on. So total 20 will be there. But he will be MD only company, one company. Maximum Mr. Narayana Murthy can become MD in 1 more company. 2 companies. He can get remuneration from both the companies as MD. MD ka remuneration, not director ka remuneration. As a non-executive, see, in other company, he'll be non-executive director. There he can get. Okay? Like that. Okay. Moving on. Now, Sriram was asking a question in the early stage. Sir, in April, how I will know what is the profit of the company? Therefore, how to be sure that I am not paying in excess, etc. I suggested that you should be able to estimate. There also, Mr. Sriram may not be very happy with my answer because he'll say, sir, estimate means estimate, sir. How I will know for sure, sir? I want certainty. In April 1, I should know what is my profit in 31/3. Only then I can pay. Such certainties are not permitted to human beings. Okay? God is omniscient. God knows everything. What is going to happen, what is happening, what has happened, he knows. You and I can only, we forget what has happened. Okay. We are afraid of what is going to happen. In the meantime, we are not able to live in the present, whatever it is. Now, in such cases, how if I don't predict my profit and I pay him, I may be paying more now. Then what to do? Or I might have paid him, then I appointed him by board resolution, thinking that I'll have profit. Subsequently, shareholders did not appoint him. They refused to appoint that. They refused to ratify the appointment. So, what happens? If any director draws or receives directly or indirectly by way of remuneration any such sums, see, if the shareholders do not approve, still if within the limit, he is entitled to take up to his date of removal. But if that part itself, they have reduced the limit. They are saying, we will appoint him, but we will only pay 3 lakh salary, whereas we have paid him 5 lakh salary. Whatever it is, any excess remuneration already received. If any director draws or receives directly or indirectly by way of remuneration any such sums in excess of the limit prescribed by this section or without approval required under this section, he shall refund such sums to the company within 2 years. He's given 2 years to refund. Because overnight you ask him how you will pay. So he has to pay within 2 years. Or such lesser period as may be allowed by the company. And until such sum is refunded, hold it in trust for the company. Any interest earned also has to be given to the company. Okay. Now, some company says, Chalo Baba, we paid him, we want to waive it. W-A-I-V-E. This is W-A-V-E, waive. Okay, shaking the hand like this is waive. W-A-V-E. W-A-I-V-E means to forego or to say I don't want. A owes me 1 lakh. I waive it. Meaning what? I say you don't have to pay it. I'm saying don't have to pay it. Maaf. I'm giving maaf. Take it. I don't want it. So, if you want to waive the refund of the above amount by passing a special resolution, you can do it within 2 years from the date the sum becomes refundable. So, he has to pay it within 2 years. Within 2 years, you can waive it. But passing a special resolution. But where the company has defaulted in payment of dues to any bank or public financing institution or non-convertible debenture holder, etc., their prior approval shall be obtained. The prior approval of that such creditor shall be obtained, which obviously he won't give you. Am I correct? You're a fool or what? He has not been paid his dues. You want to pay more to your MD and waive it, is it? They'll say, first collect that money and pay to me. Or else they will say, first settle my dues, default, and then you can take me prior approval and go. So this gives a leverage. This gives a hold to the banks, public financial institutions, non-convertible debenture holders on the company. So now the company will have to come to them and beg. So they will put a condition and say, come on, excess borrowing is 1.5 crores or 2 crores. Pay that. We agree with you. You waive whatever you want from it. Okay. So this is a good, again, when I started this topic, I might have mentioned now, every section of the Companies Act is meant for protecting the interest of the investor or the creditor. In this case, we are protecting the creditors. This is protection of creditor. Every listed company shall disclose in the board's report the ratio of the remuneration of each director to the median employee's remuneration and such other details, including their any employee above the median, you have to give the full disclosure. Median, not mean. See, when you have, why median is better? You know, that is the exact middle salary. Whereas, for example, if you take the mean, you might have a lot of people below the mean and a few people above the mean. Whereas if you take the median, you will find it is fairly distributed. And slightly the median will be away from the mean. And you will get a better hold in terms of numbers. So anybody, what is the ratio of the remuneration of each director to the median employee's remuneration? So if the median employee is getting, say, 50,000 or 60,000, our man is getting 50 lakhs. Wow. 55 lakhs. Wow. So that is the gap between, nothing wrong. Okay, in a capitalistic system, those who take risk, those who contribute more, will be disproportionately paid more. This is just like the reality of communism is everybody is equal, everybody takes equally. The reality of capitalism is if you take more risk, you get more reward. That's all. This is part and parcel of capitalism. Whether we may not like it, but what to do? That is how it is. Which is why many employees, at the end of the year, they'll say, we sweated, we put our blood and tears, and we made money. But they are getting salary. Yeah, they will. Because what risk did you take? He took his entire risk. Tomorrow, if the company had made a loss, he would get nothing. Whereas you will get your salary. But then in this case, you will also get his salary. Okay, there seems to be a small point there. But still, when disproportionately high salaries are paid to top management, please remember the risk that they take is also high. Okay. Of course, the capabilities they bring to the job is also high. Let's not forget that. The type of decision-making skills that they bring to the job is also high. Okay. Premium paid on insurance is taken by a company on behalf of its MD, WTD, M, CEO, CFO, or CS. Insurance is taken. See, this is called employer-employee insurance, where on key employees, they take certain remuneration, insurance, for indemnifying any of them against any liability. Nothing wrong. That is, the company is taking out insurance on behalf of MD, WTD, M, CEO, CFO, CS. All are KMPs, key managerial personnel. Idea is, in case there is any default by the company and these guys are incurring any liability, they can invoke the insurance and take indemnity because they are acting in good faith on behalf of the company, but some penalty is levied. They need not pay out of their pocket. They can invoke the insurance and take it. So such a premium is being paid. Okay. Against any liability in respect of negligence, default, misfeasance, breach of duty or breach of trust, which they may be guilty. But that shall not be treated as part of the remuneration payable to such personnel. So the idea of this insurance is to give some protection to them, even if they are found guilty of negligence, default, misfeasance. Okay. Then when the insurance is taken, at that time the premium will not be considered as remuneration. But if later the person is proved to be guilty, the premium paid will be treated as part of the remuneration. Okay. Again, this type of silly provision is seriously don't understand. The company is taking insurance for his breach, etc. Straight away, you say it is forming part of remuneration and go. What is that? After all, to protect him, only the company is taking. Company is not going to get any benefit out of it. Make it as remuneration straight away. Anyway, it will be a perquisite under the Income Tax Act, chargeable in his hands. Make it part of the remuneration. Still, they are saying normally it won't be taken. But if he is found to be guilty, it will be taken. Yeah, God only knows what they are doing. MD or WTD of the company shall not be disqualified from receiving any remuneration or commission from any holding company or subsidiary company of the company, subject to its disclosure by the company in the post. So MD or WTD shall not be disqualified. Meaning, if such a holding or subsidiary company want to pay, they can pay. Okay. The auditor in his audit report or in his notes should report whether the remuneration is paid by the company in accordance with the provisions of this section, whether remuneration paid to any director is in excess of the limit laid down under this section, and give such other details as may be prescribed. This is why I told you might have studied this topic under auditing, because as part of company audit, there is a duty of the auditor of the company to report whether the remuneration paid by the company to its directors is in accordance with the provisions of this section, whether remuneration paid to any director in excess of the limit laid down under this section, and give such other details as may be prescribed. Okay. Now, we go on to another very important section, which is calculation of profits. Under 187.1, we saw that profits, the remuneration is payable as a percentage of the profits. Percentage of the profits. Therefore, the profit has to be determined. Profit is already determined in Schedule 3. Schedule 3 has format of P&L account. There you will find profits are there. Now, for the purpose of 197, we have to recompute it. Net profits for any financial year for the purpose of managerial remuneration payable under section 197 shall be calculated as follows. Shall be calculated as follows, right? So, we are going to see items that are to be added and items that are to be reduced. Anything which is added, which is not part of profit, reduced. Anything which is reduced, which should come for the purpose of calculating managerial remuneration, you add. First, you see, again, you understand one thing. Some of it we anyway will be reducing it. So P&L would already have reduced it. But in case it's not reduced, you have to reduce it now. Credit shall be given for the sum specified in 198.2. So 198.1, now 198.2. These amounts, credit shall be given. That means you have to add. In case it is not already added, if it is already added, nothing, you go ahead. What is not added, add. Bounties and subsidies received from any government or any public authority constituted or authorized in this behalf by any government, unless and except insofar as central government there is direct. So sometimes bounties and so, for example, startup companies in Tamil Nadu are entitled to a subsidy based on their certain evaluation criteria. The Tamil Nadu government is very pleased to give them some money, very, very small amount. So 5 lakhs, 10 lakhs they give. When compared to their needs is in crores these way, but it's a kind of a recognition for them. They feel very happy. Okay. For that, they will ask 100 documents and certificates and all. But such subsidies, normally that company may treat it as a capital item and take it to the balance sheet. In case it is taken to the balance sheet, you can still add it. But if it is included in P&L, please don't add it again. Okay. It's already included. Don't add it. That's all. Credit shall not be given for those sums in 198.3 if credited to the P&L account for arriving at profit before tax. If you have already added it, please remove it. What are they? All that should be reduced. If it is already added, if credited to the P&L account, otherwise don't do it again. If it's not added, not added. If it is added, reduce it. Profits by way of premium on shares or debentures of the company which are issued or sold by the company. Okay, so premium on shares or debentures, profits. Obviously, this will not come here, Baba. This will go to P&L. I don't know how at all it will come to the profit account credit. If some great human being who studied in some other institute in the universe, in Mars or maybe Venus, has added this in P&L account, kindly for the purpose of managerial remuneration, reduce it. That's all I can say. Okay. Even for dividend, this should not be included. For calculating dividend also. You can't pay dividend out of capital. Okay. Anyway, because there are only certain things you can do with securities premium account. Don't forget your intermediate syllabus. Only 5 matters you can do. You can't declare dividend. Okay, on securities premium. So you can't. It should be taken out. I don't know which type of a person will do this. He must be totally devoid of any accounting knowledge. Maybe a company secretary who has been given maybe MCOM, he is also taking up the accounting function because he is getting another 50,000 more. Such a Buddhu will do this. No chartered accountant who has some knowledge will do it. Believe me. Sorry to make this comment, but that is how it is. Accounting is a fundamental accounting thing. Now. It's a capital item. How you can take it. Profit on sales. In fact, I had one classic client who was asking me to issue bonus shares out of revaluation reserve. Something like that he was telling. I said, sir, it cannot be done, sir, because revaluation reserve is there in the P&L account. It cannot be brought to the P&L account. It is there in the balance sheet. So he was saying, make an entry. He was saying, make an entry like this. Revaluation reserve debit, share capital credit. I said, sir, it cannot be done. Then he asked me one question. So he can't tell me one thing. is it correct or not to say that if an account is debited, another account should be credited? Hey, that is fundamental. Yeah, then an account is debited. That's what I'm saying. Debit revaluation reserve, credits share capital. I said, just because debit is there, credit is there, you cannot debit some item and credit some item. There should be some logic on what you're doing. Similarly, I had this classic engineer, one lady, an engineer, startup company. There is one Zoho Books. So that Zoho Book company has made these people believe that even if they are not aware of accounting, they are capable of becoming accountants merely by using Zoho Books. See, a fool with a tool is still a fool. A fool with a tool is still a fool. So Zoho Books is given to a non-accountant, doesn't make him or her an accountant. Chalo. So she maintained accounts in Zoho Books. He said, sir, no need for accountant, sir. Zoho Books is there like that. Chalo, madam, you send it. So she sent the trial balance. Share capital debit to 3 crores. Share capital debit to 3 crores. I asked her, madam, how did this happen? Sir, what, sir? You don't know fundamental accounting. She's saying, yeah, madam, I don't know. I'm a chartered accountant, but I don't know. Tell me. She said, sir, debit what comes in, credit what goes out. No, sir. Yes. Sir, share capital is coming in. No, sir. Hey, no. I was going mad. I said, madam, share capital is coming in now, so debit share capital. Then I don't know. Then I asked my people, see whether the bank is credited. That is also not credited. Some entry she has passed. Some suspense account is operating. My God. I told finally, I said, Zoho Books will thrown out. You are given 15 days time to prepare in Tally and bring it to me. Or else, you outsource it to somebody. I will give you a good outsourcing company. They will do it for you in 15 days and come. You pay them the fees and come. That's all. Short of that, I cannot do anything for you like that, I told. I cannot touch this trial balance. Take it. Don't even take it from my table. Get out like that, I told. What to do? So she went back. Then the board of directors meeting. Then they called me again. I was traveling by train at that time. Then they kept on sending messages. I kept on replying. I said, look here. If you want me to certify this balance sheet, get it properly accounted first. Then from that, let us prepare the TB. I will audit it. Then we will prepare Schedule 3 balance sheet. So there's a format for it. I know I'm elaborately wasting your time, but I'm telling us things are more and more getting robotized, and as more and more the so-called artificial intelligences are coming, many non-professionals are getting a feeling that they need not consult professionals. This is dangerous. It's dangerous. Many people are, there's a chat GPT and all, they are getting that false sense of being knowledgeable. Whereas professionals are different. We don't gain our knowledge only from the books. So much, 35 years of experience is talking to you. You had another 40 years. My father, 75 years of experience is talking to you. I'm not joking. I learned everything from my father. What all experiences he shared, I have imbibed. I have understood what he told. And plus my 35. I'm not boasting. I'm saying that is experience, right? So that cannot go into chat. That's very difficult to put experience into ChatGPT. Knowledge can be put into AI, okay? But experience cannot be. In certain circumstances, we know how to do intuitively. We know based on our past accumulate that. Such an AI is yet to come. Sorry to say. So these people, think that Google and AI, they can do anything. And they need not consult a professional. And then they get into deep shit, including income tax and all. See, they go to ChatGPT and ask questions on income tax. It will give some answer, Baba, but it won't ask the right questions. See, when somebody comes to me for capital gains, I will ask them 15 questions. In that 15 questions, I will get I will triangulate. Then and only then I will approach 45, 54, 54. EC, all that comes later. First, facts. Collect everything. Put it together. Write it down. Understand it. Float. Then you decide to give them a solution. This no AI is going to do. The minute it collects, it's going to go back to its knowledge base and see what is the immediate relevant response it will give it, which may not be correct. Probability is 75% that it may be correct theoretically, but applicability sometimes may be very dangerous. But be very careful. Okay. Anyway, good. Today I seem to be unnecessarily getting into other areas, but I think it's good because you people are not intermediate students. You are way ahead. You are final level students, almost members. Matter of days before you become members. Matter of months before you will become member of my institute. So please understand the responsibility of becoming member of my institute. It's not a joke. Member, okay? It's not a joke. So please understand the importance and be, that. So it's not just passing the exam, even getting rank, whatever. That's not alone enough. You should really understand what it means. Because when you give an opinion as a member of my institute, of our institute, once you become a member of our institute, the world will be blindly obeying you. You will see the power of CA only when you qualify. The minute you say something, no non-qualified fellow can open his mouth because you are a chartered accountant. And when you talk, you are the authority. That much, branding we are going to give you. Once you clear this exam, that paper that we are going to give you, membership to this institute, is going to carry with it so much power. You will see it. The minute you qualify, you will see that. Okay, believe me when I say this. Of course, those of you who are knowledgeable will enjoy it. Even if you are not a little comfortable, still you will find, sir, you are a chartered accountant. Kindly, your view, like that, they will defer to what you say. Something great, no? It is worth working for it, right? Keep that in mind whenever you feel bored, when you're reading section 198, think about it. I'm going to become a chartered accountant. Life is going to become glorious. Automatically, you'll feel motivated. You'll start remembering. You'll start working out problems better. Okay. Chalo. So first item was so irritating to me. I've gone into this thing. Such a stupidity, who will do? Anyway, profit on sales by the company of forfeited shares. Baba, we know the entry for that. Now, it is profit forfeited shares account data. Forfeited shares is a capital income. Finally, you have to transfer it to capital reserve, which will go to the balance sheet. If at all some foolish fellow has credited it in the P&L account, add it back. If credited, add it back. Okay. Like in the example that I gave you, it was already credited, so we added it back for forfeited shares. Profits of a capital nature, including profits from the sale of undertaking or any of the undertakings. You might ask me, sir, profits of capital nature, sale of land, building, why can I not take? Because I have been told that we can declare dividend on it. You're right. See, suppose an asset has been sold at a profit. You can declare dividend out of the profits actually realized in cash or money. Whatever is actually realized, it shouldn't be notional. The money should have come to us in the bank account or whatever it is. To the extent of the profit, you can declare dividend. But for calculating managerial remuneration, such a capital profit should be added back. There is a chance that these profits could be credited to the P&L account. Could be credited validly. Nothing wrong. So long as the profit has been realized in money, you are entitled to bring it to P&L account. But for the purpose of managerial remuneration, you have to reduce it. Okay. Even for IT purpose, what we'll do, we'll reduce it and then we'll again recompute it under capital gains. Profit from the sale of any immovable property or fixed assets of a capital nature. Okay. Comprised in the undertaking or undertakings of the company. So basically, sale of immovable property. Here they are talking about capital profits of a capital nature. Here we are talking about profits from the sale of immovable property, purely, or fixed assets of a capital nature. Okay. So should be added back, should be reduced. If that is included, reduce it. Unless the business of the company is wholly or partly of buying and selling such property or assets. Meaning, suppose you are a real estate company, then your business is buying and developing and selling land. So though land is an immovable property, the profit from the sale of that land is a revenue profit for you. In fact, the land that you are buying and holding now, it will be shown under current asset, not under fixed asset. So that's why they are specifically excluding that. Other than that, if you own investment land or investment property, or you sell machinery in the nature of fixed assets, then that profit cannot be included for calculating managerial remuneration. Provided that where the amount of an asset or liability recognized in equity reserves, including surplus in P&L account, any change in carrying amount of an asset or of a liability, which is notional and for the purpose of arriving at fair value. I'm sure your researches into Ind AS and your researches into IFRS and your knowledge of IFRS and Ind AS would by now tell you that in many cases, Ind AS and IFRS require you to measure the asset or liability at fair value, which may not be the carrying value, in which case there will be a notional profit or loss which needs to be adjusted in the P&L. Such cases you have to, if there is any notional profit, that has to be reduced. Okay. Any amount representing, see, they are only talking about profits. Okay. Not loss. Any amount representing, because here you're talking about amounts to be reduced. Right? Any amount representing unrealized gains, notional gains, or re-evaluation of assets to be taken out. Yeah, again, revaluation of asset profit should not come to P&L account. It should go to revaluation reserve. And from there, it should be charged to the P&L account every year on the basic asset cost, on the historical cost, depreciation will be charged and taken to P&L. On the revalued portion of the asset, depreciation will be charged other than land. Other than land, depreciation will be charged, and to that extent, revaluation reserve will be debited. This is the correct accounting treatment of revaluation. So that by the end of the useful life of the revalued asset, the entire revaluation reserve should be wiped off. So long as the asset also won't be there, the revaluation. This is the correct method. Okay, which is why revaluation of assets is a cosmetic activity. It is a cosmetic. It will only give you some facelift. It will not add anything to your P&L. Right? Similarly, if you are bringing any unrealized gains, notional gains into the books for sake of boosting up your profits, no. In fact, if you go strictly by accounting standards, then many of these items cannot even come into your P&L account. Okay. Now, in making the computation, the following shall be deducted: all the usual working charges, director's remuneration, not remuneration payable under 197. Sitting fees and all, you can take it out. Not remuneration. You can't, because you don't know what it is now. So you can't take it. Bonus or commission paid or payable to any member. In case any salary paid to directors included, you add it back. Then you compute 15. Then you see whether what you have paid him is correct or not. Are you able to understand? By logic itself. See, think about it. For computing partners' remuneration, eligibility 40B of the Income Tax Act, you will add back the partner's salary, right? Only on that figure you will calculate the limit, 60, 90% and all that. Then you will see whether the actual remuneration payable is within that limit. If not, you will have to take it out. It cannot be allowed. It will be disallowed. In the partner's hands also, there will be no tax. Okay, that is the point. Bonus or commission paid or payable to any member of the company staff or to any engineer, technician or person employed or engaged by the company, whether on a whole time. So bonus or commission payable, in case it is not reduced, you reduce it. Okay. Depreciation also should be taken out. Then any tax notified by the central government. Namrata ji is asking, profit on sale of immovable property is capital. Definitely. It's capital profit. It is capital. Immovable property, no? It is capital. Any tax notified by the central government as being in the nature of tax on excess or abnormal profits. Luckily, as of now, there is no excess profits tax. There was an excess profit tax once upon a time in 80s, 70s it was there. Then it has been super profit tax, it used to be called. Super profit tax. In a socialistic form of government, they did all this nonsense. Then it was removed. Interest on, because on the one hand, they were promoting capitalism behind the backdoor entry to capitalism to Tatas and Birlas and Goenkas, they were giving the then government. They were making rich people richer and richer, poor people poorer and poorer. Okay. So it needed 1991, liberalization, globalization, privatization, free market economy, pure capitalism to enter this country for this gap to come little, so that the people started earning more and the GDP went up, so that the rich still continue to be rich, but at least more of the poor became richer. They got the chance to become rich. Okay. See, I'm seeing so many places where people who are working with me in lower level capacities, their children are able to study. In fact, I have a trust where not only for my employees' children, for all the people who are they are meritorious children, trying to go to college and become engineers or become doctors or become even some chartered accountants. They are not able to pay even their tuition fees. So my trust, I give some money for the whole education, not just 1 year or 2 years. Entire 4 years of engineering college, entire 5 years of medical college. If I have committed 10,000, I give 10,000. If I committed 25,000, I give. So we take about 5 of these children and we help them. What I'm trying to tell now, these children take those families to one level above financially or 2 levels above financially. So that family has now moved up the wealth ladder. They're moving up. This is how the whole society will move up. And that is how it has to be done. By giving education, by giving opportunity to earn a livelihood, save and grow. Automatically the country also grows, people also grow. This is how it has to be done. Not by giving freebies, not by giving them for free meals, not by giving 100 rupees per day for doing nothing and drinking. No, that is not how you improve an economy. I think today I'm doing too much bhashan. Anyway, chalo. Interest on debentures issued by the company. Any interest on debentures issued by the company can be reduced because it's a charge against profit. Interest on mortgages executed by the company and on loans and advances secured by a charge on its fixed or floating assets, whatever. Any interest paid on debt, debenture, mortgage, etc. can be reduced. Interest on unsecured loans and advances. Expenses on repairs, whether to immobile or mobile, provided the repairs are not of a capital nature. Outgoings, inclusive of contributions made under Section 181, means even a contribution made to a bona fide charitable fund can be claimed can be reduced. Though for income tax purpose, it has to be disallowed. Only 80G you have to apply. Okay. Depreciation to the extent specified in Section 123. You know that 123, you studied it long ago. I do not know how long ago in intermediates. Remember depreciation. If you want to declare a dividend, you have to charge depreciation. Okay. See, this 198 and dividend are also very closely linked, right? So depreciation is to be reduced. Even for you cannot declare a dividend unless depreciation has been charged. The excess of expenditure over income, which had arisen in computing the net profits in accordance with this section in any year which begins at or after the commencement of this act. Okay, that is earlier year losses. Okay, to the extent it has not been deducted, but is still pending, then now you have to reduce that. Okay, any compensation or damages to be paid in virtue of any legal liability. So, which is their genuine expense, you claim it. Any sum paid by way of insurance against any liability mentioned above. Depreciation already covered. Again, they have mentioned it. Seriously, I don't know why. In making the computation, the following sums shall not be deducted. For example, income tax. So if income tax is already deducted, add it back. Super tax, it's not there now. Super tax, abhi nahi hai. It is not there. So don't bother about it. Wealth tax, abhi nahi hai. It has been removed. So don't bother. Only income tax. Direct tax, we have only one. Ek tax. Similarly, indirect tax, not one. We have customs also. Okay, so two. Right. And of course, states can also levy certain other indirect taxes like octroi and all that. That's slightly different. Ek country, ek tax. One country, one tax. That is GST. But if I stay, when I travel in the north, I stay in Mumbai, I pay Mumbai, Maharashtra GST and CGST. Then I bring the bill to my secretary and my accountant and I give it to her and I say, Madam, please claim ITC. She says, what, sir, you are a chartered accountant, don't you know, this is Maharashtra, how I can claim in Tamil Nadu? I said, one country, one tax now. No, sir, not possible, sir. Don't waste your time joking with me. Go. Your usual joke. One country, one tax now. I thought, no, sir, that is Maharashtra GST. But if it's IGST, you bring me, I can claim. Now, if I tell that fellow, he won't charge IGST. One country, one tax. Wow. Welcome to the confused world in which I live. Okay. Anyway, Simply slogan, one country, one tax. Huh? Income tax and super tax payable by the company under the Income Tax Act. Any compensation, damages or payments made voluntarily. That is to say, otherwise than in virtue of a liability. So, in case any compensation or damages are paid voluntarily, okay, they are not part of the expenses. Now, so you add it back for the purpose of managerial remuneration. In case a loss of a capital nature is included here, just as profit was reduced, loss of capital nature, if included in P&L, add. Again, any change in the carrying amount of an asset which reduces the profit, add. There, any profit which was notional for arriving at fair value, you reduced. Here, any amount which will reduce the profit for arriving at fair value, add. So this is how it is. So we have already seen this. You have got the right answer correctly at that time. Now the computation is given here. So beautiful. So this is thing. Okay. Try to solve this problem. See, director's fee here means sitting fees now. Don't confuse. This remuneration payable to him now, which you are now calculating. If you have paid any salary to him, you add it back. And please note, before considering the following items. Before considering the following items. Maybe I'll give you about 3 minutes. 3 whole minutes to do this. Have a paper and pen and try to do it. What is the maximum remuneration payable to MD without complying provisions of Schedule 5? That is purely 197(1) based on profits. So, because if you go to Schedule 5, you can pay more. But remember, Schedule 5, Part 2, Section 2, only when there is inadequate profit. When there is adequate profit, you pay 1. And again, remember, the total cannot exceed 11%. Just give me a heads up that you are trying to solve this problem. Otherwise, I'll keep moving on. Okay. Let us see. Because, see, I'll tell you the problem. This same video may be downloaded by somebody in future who is not attending the live class. No problem. So such a person, this part, they will feel a little bored. Therefore, I'm proceeding with the answer. Gross profit 40 lakh 38,000, no problem. Salary and bonus not considered. Before considering, na. So not considered, na. Therefore, add the reduced salary and bonus. All the usual charges, no, salary and bonus to be reduced. Repairs to buildings. Repairs are allowed, na, we saw. R&D not allowed. Kyun? Because it is for purchase of equipment, capital not allowed. Director fees allowed. Okay. But managing director salary not to be considered. Don't take it. If it is reduced, add it back. If it is reduced, add it back. But here it has not been considered, ignore it. But if it is reduced, I will add it back. Interest on debenture allowed. Profit on sale of plant not to be considered. Okay. But see that depreciation provided on plant up to date was 42,000. Okay. Now, that to the extent of the depreciation, there is a revenue profit on sale of plant now. That extent we will take it here. To that extent we will take it here. Okay. Now, subsidy from central government can be considered unless specifically not allowed. So I have a number called 40,03,000. So the maximum remuneration is 5% of that, 200,150. Okay. Now, this may not be a question in your law paper, but something in a simpler form may be asked, maybe taking only 2 or 3 of these items. But in auditing, this might become relevant. See, there's an overlap area where you will have auditing also, you might get topic questions from this area. That is why you have to be a little careful. Okay. Now, we spoke about refund of excess remuneration and waiver and all that. Now, 199 talks about circumstances when managerial remuneration shall be recovered. That means where a company is required to restate its financial statements due to fraud or non-compliance with any requirement under this Act and the rules made thereunder. Okay, then where a company is required to restate due to fraud. See, again, this is in connection with Satyam. When in Satyam case, what happened? The great Ramalinga Raju told profits are wrong. So it had to completely restate. And all the dividend declared was all seen to be wrong and all. So in those cases, when this is done, then any past or present MD or WTD or CEO, by whatever name called, who during the period in which the financial statements are required to be restated, you recover from him. What is to be recovered? The remuneration, including stock option, in excess of what would have been payable to him as per restatement. So you wantedly boosted your profit. See, one fallout of Ramalinga Raju's showing higher profit was he would have taken higher remuneration. Nah? So that remuneration in excess of what would have been paid to him, if the correct profit had been taken, that should be recovered. And no question of waiver. Such recovery shall be without prejudice to any liability incurred in addition. He may be criminal liability. In addition to that, you can recover the excess remuneration. You shall recover. I don't know if this was done to Mr. Ramalinga Raju. Why? Because when Satyam fraud was committed, the section 199 was not there. This is all closing the stable door after the horse has gone. Okay. But at least you should do it. I don't know if you're aware, two brilliant chartered accountants, one of whom is a past president, illustrious past president of our institute, CA Padma Shri T.N. Manoharan and CA V. Pattabhiram have written a book, Tech Phoenix, where they have described how Mr. T.N. Manoharan, CA T.N. Manoharan, he was instrumental in the recovery of Satyam after the scam. So there, in a very, very nice and very, very beautiful way, the authors, they describe the Satyam scam in a very, very nice way. I love the way it has been dealt with, where they are not condemning Mr. Raju, but rather giving him the benefit of the doubt, giving the auditors benefit of the doubt, but at the same time clearly mentioning what was done. It's a beautiful book and you should read it. Also, our illustrious past president, C.A. T.N. Manoharan, speaks about ethics in one chapter that you have to read. As a budding and new member of our institute, you should read that. He shows how unethical things happen. It doesn't happen in one shot. It happens in stages. First stage, you feel, no, I should not do it. Then somebody says, this one alone we will do. Small way we will do. Then that you do. Then that small becomes a little bigger. Then finally, in Tamil Nadu, we say, you have become fully wet. Why do you need a cover? You throw it and you go. So the point is, that's a beautiful way he has written. In case you don't have a copy of the book, I'm sure in your office, if you're working in a CA firm, your boss will be having. And in case he has finished reading it, ask him to lend it to you, read it. At least that 1.5 pages of that book, should be made compulsory reading for all CA students and CS as to ethics. What is the issue there? Okay, it's a beautiful book. Believe me when I say this. Sriram cannot understand which one point. Srikant cannot understand any of this. At least Sriram cannot understand only one point. What is that point? Let us see. One sec. Profit on sale of plant turned to the extent of depreciation charge. I'll explain. See, friends, there is a profit on sale of plant, right? Already depreciation has been charged now. Now, the plant is being sold above its original cost. Therefore, the depreciation which is already charged has also been received as a profit. That depreciation was charged to the P&L account, right? To that extent, it is revenue and taken. To the extent that it was already charged. Okay? To that extent, it is taken. Let me see if I can show you that note. See, to the extent that the depreciation has been debited to P&L account, we have now, it has been sold at a profit, right? So that already depreciation provided on the plant, we have now got it back. So to that extent, it becomes a revenue profit. Okay, this is the best. If you do the accounting entries, you will understand. If you see the original cost, then you see the sale value, profit, you will find that you are getting much more than the original cost, which means today's WDV. So to the extent that it is more than the original cost, the depreciation has been recovered. To that extent, you can take it as revenue profit. Okay, so that is the explanation for that. Good. So this is recovery of profits. I'm seriously thinking if I can complete this topic today, because if I don't complete it today, I will end up quickly finishing it next class. Let us see what happens. Notwithstanding anything contained in this chapter, a company may, while according its approval to any appointment or to any remuneration in respect of cases where the company has inadequate or no profits, fix the remuneration within the limits specified in this act. So the company has the power to fix at such amount of percentage of profit as it may deem fit. Okay. So the company is according remuneration when it's inadequate profit or no profits. At that time, they will say, chalo, don't come to us every year. Up to this percentage, you take it. While doing so, they will see the financial position of the company, remuneration or commission drawn in any other capacity, remuneration or commission drawn by him from any other company, professional qualification, etc. Okay. Exactly. If it is not credited, it was debited, right? But now to that extent, the profit is allowed to be added. To that extent, the entire profit cannot be taken. Only to the extent of depreciation, which was earlier debited, Now you can add it back. The other capital profit cannot be taken. The other part of that, which is pure capital profit, cannot be taken. Only to the extent of the depreciation, you can take. See, there is a WDV, there is a depreciation 42, original cost. Your value is no more than that original cost now. So that 1,20,000 includes this 42 also now. Because 1,20,000 is after reducing the WDV. So that includes that 42 also now. To that extent of 42, you can consider. But the balance is pure capital, which you cannot take. Above the original cost, you cannot take. If I had given you the original cost and WDV, now you will understand. So, original cost minus 42 WDV, no problem. Your profit is over and above the original cost, na, 120. Over and above the WDV, na, that is 120. So, in that 120, this 42 is also included. Na. This 42 was already debited to P&L account, right? Now you can add it back for purpose of calculating managerial remuneration. But capital profit, other than this, you cannot take. To the extent of the journey above the original cost to 120, you cannot take. From WDV to 120, which is 42, you can take. Okay. I think this is the best explanation I can give. Wonderful. Now, applications to central government for approval, where you are exceeding the limits and all, form number MR2. And before any application, there shall be a general notice to members that we are going to make such an application, so that any member can object to the central government before approval is given. It should be published at least in one newspaper in the principal language of the district in which the register of the company is situated. The copies of the notice to be attached to the application. Now, compensation for loss of office. Very interesting topic, right? A company may make payment to a managing or a whole-time director or manager, but not to any other director. Only MD, M, WTD. By way of compensation for loss of office. We already saw it when we came to removal by tribunal and all. We said he will not be eligible for compensation. So in any other case where he is removed, we can pay him compensation. Right? After all, he was appointed for 5 years. You are removing him at the end of second year. He is entitled to compensation. But no compensation is payable to directors other than MD or WTD. So a part-time director may be removed. No compensation. Compensation shall not be paid in the following cases. Where the director resigns from his office as a result of reconstruction of the company and is appointed as the MD or WTD in the reconstructed company. Where is the loss of office? You resigned there, you are appointed here, no problem. Where the director resigns otherwise than on reconstruction. See, this fellow resigns. Why I should pay? He should pay me compensation for leaving. So no compensation. Where the company is being wound up, whether voluntarily or otherwise, due to the negligence or default of this director. This is the fellow who caused. He is a specialist in winding up companies. There are some people like that. I have seen, but they are very successful in corporate. Every company where they go, they will taint it. They will destroy it. But they will become richer and richer. Where the director has been guilty of fraud or breach of trust or gross negligence or gross mismanagement of the conduct of the affairs of the company or any subsidiary or holding, then in those cases, why I will pay compensation? Fellow has been guilty of fraud. Why fellow? Felly also. Both. In this case, there is equality of men and women. Both are capable of being guilty. Chanda Kochar, classic example, breach of trust in relation to gross negligence or gross mismanagement of. See, when Chanda Kochar was, she was in the, cover page of every magazine, women manager, women leaders, she will be there. Number 1 or number 2, 3, she will be there. But when we discovered that she has committed breach of trust with ICICI Bank, then there we cannot protect her as a woman because she claims so much as a woman. I am woman so and so, woman so and so. No woman fraud. That also we have to tell what is there. Okay. Where the director has instigated or has taken part directly or indirectly in bringing about the termination of his office. Okay. Director has instigated or has taken part directly or indirectly in bringing about the termination of he himself. How it can happen, See, this man is a director in our company, but he is working for some other competitor. How? By creating giving some information, he is sharing our data. Can happen, boss. high-level corporate espionage. It happens regularly. In India, it's not so much. You go to Japan or you go to US, this happens regularly. It's called corporate espionage. Where a guy comes in, he may not, when he joins, he may be a good boy. Then that company, somebody will come and take him to the bar one day and say, you know what, how much are they giving you? Don't worry, we'll give you some dusra income. You keep telling us information. Finally, we discovered that this fellow is doing like this. So he has instigated or has taken part directly or indirectly in bringing about. Then we quietly call him and say, sir, if you think that it should not be added, you leave it, Sriram. Don't waste our time. Even I feel bad. I have given my explanation. So this 42,000 has already been debited as depreciation. In some earlier year, it has been reduced as depreciation. Now it is included in the profit. To the extent of the depreciation already reduced, you can add it back. That's all. If you are not able to accept it, please, we rework the problem in your own way and solve it. Okay. I'm explaining it again. Listen to me. Depreciation to the extent of 42,000 is already charged in an earlier year, Baba. Based on that only WDV has come. Now I'm selling it at a profit 120. That 120 is sale price minus WDV. In between, there is something called original cost. So WDV to original cost is that 42,000 journey. Already debited in some other year in the P&L. Now, because it was already debited, now added. Understand? Not as profit. Capital profit cannot be considered. It is not being added as profit. It is being added because it is embedded depreciation in this profit. To the extent that it was already reduced, I am now adding it back. That's all. Okay? Because we have recovered more than the original cost. So from WDV to original cost alone, I am adding it. I think I have explained it enough. If you still feel there is something wrong in what I'm saying, or if you feel that you are not able to understand, that's it. Okay. But I understand your doubt. That's why I'm giving so much elaborate explanation. Okay. So now I hope it is clear. So suppose the problem I had given you original cost and WDV, you will understand. I have not given. If I give you the numbers now, you will understand. That's why when I'm giving WDV, original cost, sale price. You're not able to abstractly think like that. That is the problem. Put some numbers there, you will get a better idea. Okay. But the director has instigated, we saw that. Quantum of compensation. Quantum means amount. Quantum means amount. How much can be paid? Okay. The remuneration which he would have earned if he had been in office for the remainder of his term or for 3 years, whichever is shorter. See, suppose he had continued for his remaining term, whatever it is, or for 3 years, whichever is shorter, that remuneration which he would have earned will be paid. Suppose we will see, when I give an example, you'll understand. It will be calculated on the basis of the average remuneration earned by him during 3 years immediately preceding, or if it is lesser than 3 years, during such period. See, this calculation will be very easy to understand. Sorry, Sriram, I appreciate that you are having a doubt. I'm the best of my ability. I'm helping explain to you. Thank you very much for confirming that you understood. Clearly understood. Thank you. I wish I had given the next time when I give this problem in the class, I will see to it that I give original cost and full explanation for it. Thank you. Now, see, that guy is appointed for 5 years. We are removing him at the end of the first year. Then he'll have another 4 years of office. Remaining period is 4 years, but you can pay only for 3 years based on the remuneration earned during the first year. So RN means remuneration actually earned during year N. So remuneration actually earned during 1 into 3. Suppose second year end you are removing him, then average remuneration. Average remuneration actually earned by him. Correct? So R1 plus R2 by 2 into 3. Third year, R1 plus R2 plus R3 by 3 into 2, because that is the remaining period of office. End of third year, only 2 years. Fourth year, last immediately preceding 3 years. Am I correct? Immediately preceding. Therefore, R4 plus R3 plus R2 divided by 3. That's all. Why? Because only 1 year you are going to pay. Multiplying by 1 is unnecessary. Only 1 year you have to pay. Fifth year end, kick him out. No compensation. Why I should pay? 0, nothing else. Okay? No need to pay any compensation. Got it? Yeah. So no compensation is payable if winding up commences within 12 months of ceasing to hold office and assets are insufficient to make the payment. See, he ceases to hold office, then within 12 months winding up commences and assets are insufficient to make payment. Yeah. Then we say, why I will pay you? No compensation, get out. So this is one more ground when compensation need not be paid, where winding up commences within 1 month. Okay. Nothing in this section shall be deemed to prohibit the payment to an MD, director, etc. for any remuneration for services rendered by him in any other capacity other than as a director. KMP, we already seen all these people. Okay. Every listed company and every public company having a paid up share capital of 10 crore rupees or more should have the following: managing director or CEO or manager. See, MD, CEO, manager, they are all synonymous, guys. MD, CEO, so call him what you will, you can. But MD alone, remember, he has substantial powers of management. CEO may not be. Again, MD may not be, will be a director. CEO need not be a director. Manager also. In case none of these fellows are there, you should have at least one whole-time director. You should have one company secretary. If the share capital is 10 crores or more, company secretary compulsory. CFO compulsory. Okay. Private company, which has a paid up share capital of 10 crores or more, shall have a whole-time company secretary. An individual shall not be appointed or reappointed as the chairperson of the company in pursuance of the articles of the company, as well as MD or CEO at the same time, unless the articles provided otherwise or the company does not carry on multiple business. First, I will explain. Normally, MD cannot be chairman. Chairperson should be different from MD. I told you now, this whole stupid designation of CMD is wrong. Chairperson alag hai, MD alag. Only in India we have the stupid designation CMD. Now they have removed it. In a company, you cannot have both the same person as chairman and managing director. No. If you be managing director, then you should have another chairman. If you have a chairman, then that fellow should not be MD. Okay, or CEO. But exception, if the articles of the company provide otherwise. So if the articles provide otherwise, you can have, or the company does not carry on multiple businesses. Okay. So if the company does not carry on multiple businesses, then chairperson and MD cannot be the same. But if multiple are there, then you can have chairperson and MD as the same person. Okay. A company having a paid up capital of 100 crore rupees or more and annual turnover of 1,000 crore or more, and which has appointed one or more CEOs for each business, may appoint an individual as MD as well as CEO. That is, the same person can be MD as well as CEO, provided it has 100 crore rupees or more and annual turnover of 1,000 crore rupees or more, and engaged in multiple businesses. And for each of the such business, it may appoint an individual as MD as well as CEO. Every whole-time key managerial personnel shall be appointed by means of a resolution of the board containing the terms and conditions. A whole-time KMP shall not hold office in more than one company except in its subsidiary at the same time. So he can be in the holding and subsidiary at the same time. Other than that, he cannot hold in more than one company, provided that nothing in this section shall disentitle a KMP from being director of any company with the permission of the board. Okay. Any whole-time KMP holding office in more than one company at the same time on the date of commencement shall, within a period of 6 months, choose one company and continue only in that company. Now, exception, MD. MD is an exception. Please understand. Other KMPs cannot be in more than one company. Only one. Whole-time director in only one. Okay. Secretary in only one. CFO in only one. CEO in only one. But MD alone, exception. If he is the MD or manager of one, and a manager also, you can appoint him as an MD of your company provided he is the MD or manager of one and not more than one other company. Meaning, other company means either public or private. If he is an MD of one other company, you can appoint him. But if he is MD of two companies, you cannot appoint him. And such appointment or employment is made or approved by a resolution passed at a meeting of the board with the consent of all the directors present at the meeting, and of which meeting notice shall be given. This is very interesting. So, Mr. A is already an MD of Dubakur Limited. Now, Samrat Limited wants to appoint him as MD. Can they do so? Yes. He can be appointed in one other company. You can appoint, Samrat can appoint. Then, the board of directors of Samrat Limited should pass a unanimous resolution. The board of directors of the second company should pass a unanimous resolution. Okay. If the office of any KMP is vacated, the resulting vacancy shall be filled up by the board at a meeting of the board. Okay, within a period of 6 months. In case any default in complying with the provisions of this section, penalty of 5 lakhs and continuing a penalty 1,000 for each day. Secretarial audit is also made. I'm going to complete this topic today. Aaj to I'm going to complete this topic. Okay. Though there are 3 sessions, I'm going to finish it in 2 sessions. Let us see. Every listed company and companies mentioned below shall annex with their board's report a secretarial audit report given by a company secretary in practice in form number MR3. Who are they? Public company having paid up share capital of 50 crore rupees or more. Company having turnover of 250 crores or more. Every company having outstanding loans, etc. more than 100 crore. Here they are not distinguishing public and private. Even a private company having outstanding loans or borrowings from banks or PFSI 100 crore, then secretarial audit. It shall be the duty of the company to give all assistance and facilities to the company secretary in practice for auditing the secretarial related. So, 50 crore rupees paid up capital, secretarial audit. 250 crore rupees or more turnover, secretarial audit. Public company. Outstanding loans or borrowings from banks or PFI 100 crore or more, even private, public, secretarial audit. Every company. The board of directors in the board's report shall explain in full any qualification or observation or other remark made by the company secretary, similar to our audit, secretarial audit. If a company or any officer of the company or the company secretary in practice contravenes the provision of this section, the company, every officer of the company or the company secretary in practice liable to penalty of 2 lakh rupees. The functions of the company secretary. This is not the secretarial audit company secretary. The employee company secretary's job to report to the board about compliance with the provisions of this act and rules, to ensure that the company complies with secretarial standards, to discharge such other duties as prescribed in Rule 10. No need to know. Just wonderful. So time is exactly 9:01 and I have completed this topic. So on Thursday, I will be starting meetings and meetings of the board and powers of the board of directors. Right? Good show. Wishing you all a great evening ahead and a great day tomorrow. Bye.